how to find high probability intraday trading opportunities. My name is Don Kaufman, and you are watching a TheoTrade presentation. We have a risk disclosure. We're not financial advisors nor a broker dealer. So I've been trading now for about 22 years, of which I had about 15 years inside of the brokerage industry. I'm no longer in the broker dealer industry. I'll talk to you about that in just a moment. This copyright disclaimer. This is ours. It's not yours. Listen. After this evening, if you ever got to get a hold of me, and I want people to know this, and I always say this, like just email us. It's okay, right there. We use a common inbox, support@theotrade.com. Just put Don in the header. Put Don in the header. It'll get to me, and it's important that you guys know that. By the way, when I say you need to email me, you have a trade-related question, shoot me an email. That's what we're here for. Right? So by all means, feel free, and do know the email address, support@theotrade.com. As I said, we use a common inbox. That'll get to us. All right, moving on. This is why you're here tonight. So anytime I do one of these webcasts, okay, I always want you to be able to walk away with something definitive, something you can actually take to the market tomorrow. Now, a few things we're going to talk about this evening: how to generate high probability outcomes with intraday trading setups. Time out for a second before I go any further. How many people are familiar with the terminology intraday? Okay, because some people are not, and that's all right. And I want to get through some of the terminology so that we're all on a level playing field, right? So how many people are familiar with the term intraday? If you're not, what does it mean? Okay, you're in, you're out, you're on with your life. It's all in one day. Some people actually use that terminology still. Day trading, it's a dark term, especially if you spent 15 years in the brokerage industry. Nobody ever uses the term day trading. It's intraday. A lot of people are going to ask the question, and I'm going to cover this again tonight, but a lot of people are going to ask the question. They're going to say, I don't have $25,000 in my brokerage account to be able to day trade. You do not need $25,000 anymore to trade on an intraday basis. Very straightforward. You can now legally circumnavigate the day trading margin restriction. There are brand new products that you can do this with, okay, with literally dollars at risk. You can trade now in the marketplace, have $70 at risk, have $30 at risk, literally on an intraday basis. One of the greatest new products that's come out literally in decades. This is like the greatest product that's come out. So anybody can trade on an intraday basis. Most people, though, are not familiar with that. So I wanted to get that out front, but you're going to hear it from me again tonight. So again, we're going to talk about intraday trade and really specifically high probability outcomes. We're going to actually how to select the right options for an intraday trade. Hey, you can be right less than 50% of the time and still receive consistent trading results. Time out for a second, okay? This is probably one of the most critical things you're ever going to learn. And I'm going to show you that. And it's like the first real, trading aspect that I'm going to get to tonight, where you can legitimately be like wrong and still come out ahead in your trades. And most people, they don't really get that, and when I say they don't get that, how can you do that? Flip a coin, all of a sudden heads you're right, tails you're wrong, but you actually can come out less than 50%. You're going to see just that. It's all about edge. All right. Number 4 over here, why intraday trading does not mean that you need to be glued to your screen all day. This is not going to be sitting in front of the screen. We're actually going to place trades and walk, and you're actually going to see that to make that point, to really kind of delineate a little bit about intraday trading and not being glued to your screen. I am going to display my own trades. Number 5. How to circumnavigate day trading margin restrictions with various alternatives. So that's obviously the second time I've mentioned that because it's important. Again, some brand new products have come out that change the entire perspective. There's no more day trading rule. It's over, baby. It's about time. All right, for those of you who are joining us live here tonight, we have a gift for you. Stay with us right to the end of the webcast. Okay, there is an indicator that I am going to be talking about throughout the course of this evening's webcast, and that indicator is Cumulative Ticks, okay? And I'm going to show it to you here momentarily. It's actually what we call Quantix. And what it does, it's a quantitative, and some people are not familiar with that terminology, but quantitative, tool to help keep a tabulation, right, and insights towards market shifts. Now, talking about it just doesn't do it justice. I'm going to show it here momentarily. It's a $497 value. The reason we provide this to you, okay, and we're going to do it right at the end of the webcast. I'll actually provide you a web address. You can go to the web address. You can download the indicator. It's an indicator. When I say I use it every single day, here, this is actually my trading application, okay? And when I say I use it every single day, it's, well, here it is. It's literally on the bottom of my trading application right now. And again, when I say consistently, it's something we use nonstop. All right. So again, you'll see this come up a couple of times this evening. Again, this is what it actually looks like, and I'll take you into just a little bit of detail here momentarily. This happens to be the futures, but that's neither here nor there. You don't have to trade futures to use this. What you're actually looking at over here, this is the MYSE tick. People are familiar with like tick data, right? It's the number of stocks going up over the number of stocks going down. What this actually does is keeps a running tabulation of those ticks. But this up here wasn't far enough. That just accumulates ticks. Anybody can build that. We actually built, okay, comparative quantics. So not only is it accumulated, it accumulates it for the NYSE, the NASDAQ, the Russell, and the S&P 500, and does it on a comparative percentage basis. And you can see today was actually, this is actually a screenshot literally from today. Today, those ticks were viciously breaking to the downside. And this is actually before the marketplace sold off quite considerably today, which was news, but it's a leading edge indicator. And I feel pretty strongly about it because, again, it's one of the few quantitative tools out there. So hope you guys, again, stay with me right to the end of the webcast. Hope you do appreciate that. It is a phenomenal tool that we want to provide to you. And again, we do this simply because I allude to it a number of times this evening. It's just not right to not, if you would, give it to you, because, again, it's a phenomenal tool. So next on the list over here, a little housekeeping item. Listen, tonight, especially in the first 20, 30 minutes here, we're going to go a little bit deep. So if that's all right with everybody, when I say we're going to go a little bit deep, listen, this is a skill set. You got to pay pretty careful attention to some of the course material this evening. In fact, more than any other webcast that I do, when I talk about intraday trade, and especially, again, this first example here in about 15 minutes, when we're going to get into some deep concepts, you got to pay careful attention. I say shut the door, turn off Skype, chat, whatever else is distracting you. Get rid of Facebook forever. Okay, phones on silent mode. Kick out the kids, the grandkids, whatever else you got going on. Again, you're going to get a huge amount out of this. Pay very careful attention in a few minutes, and I'll actually detail when that time is. Listen, you took the time to be here. This is important. Focus on being here. So this is a little bit about me. So I watched order flow for 15 years, and that is in very large part of what has brought me to you this evening. And I'll just give you a little background on myself, okay, where I kind of come from. Some people here are maybe brand new. Who here is brand new tonight and have never been to a TheoTrade presentation? Of course, it could be, but it's okay, right? Who here has never been to a TheoTrade presentation? Because, again, you popped in over here. There's a couple people. There's a couple me's. Come on, people, admitting it's the first step this evening, all right? So if you're kind of unfamiliar with me, I've been around the industry. When I say the industry, I wasn't just a trader. So I grew up around traders, around market makers. And I had an uncle that was involved in a Chicago firm. He was the founder of the firm back in 1976. He started with one seat on the floor of the Chicago Board of Options Exchange in 76. By 1983, himself and his firm owned over 500 seats around the world. And that firm was called O'Connor and Associates. And if anybody is from Chicago, you would know O'Connor and Associates is hailed as one of the greatest trading firms ever. The firm was actually purchased by the Swiss bank in 1992. It was a multi-billion dollar deal. It was actually one of the largest financial deals done at that point in time. Connor was bought out, and that was by 92. So I actually got involved in trading in the late 90s. Had a cousin that actually traded in Chicago. I was 3 weeks out of college, and I ended up on the floor of the Chicago Board Options Exchange. Only a few months after that, they actually moved me upstairs as a derivatives risk manager, and I traded there from 98 to about 2001. 2001, I was actually invited to a startup brokerage firm that nobody had ever heard of. Bet you've heard of them today. That brokerage firm was actually called Thinkorswim. So I started with Thinkorswim when Thinkorswim started. Literally, from pretty much from day one. I was lucky number 13 to work at Thinkorswim. So I was on the executive team of Thinkorswim when we took in private equity, which is in 2004. I was also on the executive team there when we actually took the company public in 2007. And my skill set, I built their entire education division, built out a lot of the education modules on Thinkorswim, and helped actually build a huge amount of Thinkorswim. We were purchased by TD Ameritrade in 2009. I then went on to actually run education for all of TD Ameritrade. At one point, I think we had 768 people in our education organization, and it was an interesting run. We had 7 million clients. I exited TD Ameritrade in 2015 to ultimately turn around and then build TheoTrade. Probably one of the most prolific things that I don't often discuss during that time frame from 2001 to 2015. Listen, we got to see everybody's order flow, and that was the game changer for all of us that actually were in that education division. When I say we got to see your order flow, we got to see everything everybody did, okay, for 15 years at a firm that had the largest options order flow in the entire industry, bar none. I mean, Thinkorswim, not everybody's on Thinkorswim, and that's okay, but Thinkorswim had more option traders on it, okay, basically from 2004 until right now. There's no other platform that has anywhere near the number of options traders and futures traders on it. And what we got to do to build the education division of TD Ameritrade and to build the education division of Thinkorswim is we got to watch flow. And what that basically meant is we actually studied everything you did. You name a strategy in this business, I can tell you everything about it. When I say a strategy, you say I did iron condors. I can tell you if you make money, lose money, everything. We actually had an entire group of individuals to actually go in there and parse out the data, tell us what works, what doesn't. And what you're going to learn here this evening is literally coming from watching billions of dollars in others' mistakes and the knowledge of what works best for retail traders. It's not about market making. My market making background, who cares? Market making has nothing to do with retail traders. Completely different business, right? And that's the knowledge and skill set that we provide you here tonight at TheoTrade. So I still do some media appearances. This is actually on TD Ameritrade TV. I do TD Ameritrade TV about once a week. This one's actually the last time I was in Chicago. It's been a while since I've been in Chicago. I'm not going anywhere anytime soon. I was actually in studio though in Chicago. I actually just did an appearance on TD Ameritrade TV yesterday. This is actually a little while ago. This is about 5 years ago. This is myself pitted against the man himself, Kevin O'Leary. So the head shark, by the way, I'm going to ruin it for you. Couldn't be a nicer guy. I was the short in Apple. He was the long. And for the preceding 6 months, Apple actually sold off at that time quite readily. So let's get started. That's a little bit of an introduction. Okay. I like what somebody just said. TD Ameritrade has not been the same since 2015. I love it. Okay. By the way, I couldn't take. People always ask, why'd you leave TD Ameritrade, man? You could have. Charles Schwab bought him out. You missed out. Yeah, all of my stock was handed to me at about $38 a share, and I kid you not, to this day, it's 5 years since I've left, and all the stock was out at $38 a share, and that's about what it's at right now. I say 5 years of my life. Nah, it had nothing to do with anything other than I am not a corporate guy. I don't like the regulatory bodies, and listen. I like building small companies. That's what it's about. Let's get started. Embrace the chaos. Okay? And that, by the way, that can mean a whole lot to you. When I say embrace the chaos, that's all we're seeing in the markets lately. Markets are completely manic. And you know what? I don't often bring up, a chart here early on, but let's go for it. I say markets are manic, right? This is manic. This is manic. This is insane. It's one of the largest crashes you've seen. One of the largest crashes you've seen since literally the depressionary times of the 1930s. We rebound, take off to the upside, we back off, we rally on what is horrific news lately, and this is going to continue. And there's just no question about it. People, well, we're going to go up, we're going to go down. Does it matter? Okay? Does it matter? You got to just embrace the chaos. And when I say volatility is good, you have to understand the higher the volatility. When I start talking about volatility, I can throw the VIX in here. All right, this is the volatility index. Just take a look where we're at right now. And again, I don't mind bringing up a couple of charts in here. Take a look. This is where volatility currently is. This is where it's been. Again, you're on a 5-year chart. Over the last 5 years, okay, this is gold. It's absolutely spectacular. I know nobody necessarily feels that way because if you have a 401k and IRA, you're like, I almost had a heart attack back in March, then I got my money back, and it's a lot of ups and downs. Embrace that kind of chaos because this kind of volatility doesn't always happen, all right? And what we're going to do is we're going to talk about how to actually embrace the chaos. So let's get to work. This is where you're really going to want to start to pay attention, right? I mean, all right, the honeymoon is over. Is that all right with everybody? And by that I mean, now we're about to get serious. There are, principles here at TheoTrade. And these principles are guiding steps into anything that you're going to do in this business, okay? Now, when I actually come up and present to you principles, trade logic, and allocation, and directional bias, all right? This didn't originate with me. This didn't originate with TheoTrade. This actually originated with trading firms, stemming back from 40 years ago, all right? And that's where these 3 principles actually originate is literally inside of a trading firm. And what it basically means, is tonight we're going to focus on intraday trading setups, but it's critical. Okay, that you distinguish effective trade performance, which is based on these 3 factors: logic, allocation, bias. Logic, allocation, bias. And when I start talking about these things, people could totally deer in a headlight on me, right? Don't go deer in the headlights. Trade logic. Listen, how you approach the markets is vastly more important than being right or wrong in the markets. That's the one thing people don't get. I mean, you think about this, but how many times, step back from whatever you're doing right now. How many times have you been right directionally, but you still lost money in a trade? All right, and that usually means this. You buy a stock, right? By the way, how do you get a stock to go down? You buy it. So you turn around, you buy a stock, and then you buy the stock, and then it goes down. And right there, stopped out. You get stopped out, and it just rips to the upside. Anybody ever pulled that one? You're like, I was so right. I was just my timing was off. That one always kills me. Nobody here ever wants to admit that, huh? Come on, anyone? Nobody here has ever been, right and still lost money in a trade. Because the one thing you're going to learn tonight is when you start looking at these 3 principles, this doesn't resonate with anybody yet. It doesn't resonate because you don't know what it means. What it means, who cares if you're right directionally? Being right directionally, that's tertiary. That's the 3rd one on the list. You got to have trade logic. You don't even know what trade logic is, You got to have the right allocation because if your allocation's too big, clearly you're going to panic and lose control. Oh, I'm scared. It's moving against me. You have to have these factors in play. So when you think about trade logic, well, we're going to explain that. Tonight, I'm actually going to cover a little bit about trade logic. The first thing we're going to do when trade logic comes into it, first step, define your trading strategy. Break down the logic. When I say define your trading strategy and break down the logic, right? What does that amount to, right? You have to ask yourself in everything that you do, if I were to do this and this type of a trade 100 times, what's my outcome? Do you ever ask yourself that? I mean, it seems like, and I'm not being facetious in any way, shape, or form with this, But when I say you do something 100 times, so you go out and buy a stock, and I ask you, why'd you buy the stock? You go, thought it was going to go up. Do you really think that that is going to work on an intraday basis? I've actually heard people say, don't worry about it, man. The market always goes up. Maybe you've only been in the market for 6 months. Over the last 6 months, it goes up, except the last 4 weeks. The last 4 weeks has been a little bit challenging, right? But what you have to do, and you have to understand, is that many directionally challenged traders can still perform if given the correct trading logic. The point that I'm trying to make over here, just real quick, you have these trading firms, and trading firms literally have billions and billions of dollars that they put to work. Do you think those trading firms, okay, put that capital to work based on, I think I'm going to be right? And when I say that, I mean, I think the stock is going to go up. They sit there all day. What do you think the MACD is going to do? What do you think my Fibonacci is looking like? There's a trading logic they're using. It's a mathematical logic, okay? Because I'm going to tell you right now, if you think you're going to be right in this business, you better find another business real quick. And that's all they ever talk about, like on TV. What do you think, they do on CNBC? They just talk about are you going to be right? Are you going to be right? Nobody ever gets on there and they say, hey, this is the right strategy for this market at this point in time. Because strategy and trade logic doesn't make for good TV. Nobody wants to hear about that, except that's how traders make money. Listen, intraday options and trade logic. In order to create a viable intraday trading strategy, we're actually going to employ the use of options. I said the O word, okay? Who tonight has no experience trading options? Come on, we got a lot of people on tonight. Who here is brand new, no experience to options, okay? Nobody ever wants to admit it. I have like a whopping 3 people. There's almost 1,000 people on tonight, and like 3 people ever admit that. Okay, so I'm under the assumption then that everybody in here knows what's going on, right? Okay. There's only 3 people that don't know options. Okay, that's all right. I'm going to spend a little bit of time for those 3 people, but we're going to employ the use of options. And you're going to see why here momentarily. Even if you have absolutely no experience with options, do not panic, okay? We're using defined risk, which means you know exactly how much risk you have, okay? And as a trade, it will not have to be monitored throughout the course of the day. So we're going to come in here. We're going to have this defined risk trade. You don't have to sit there and watch it. We're just not going to watch it. And translation, you don't have to be glued to the screen, right? Again, if you have absolutely no options experience, do not have cause for concern. I'm going to take you through a very basic example here. Now, why do you want to use options intraday, right? And a lot of people, they know a little bit about options, but they're not entirely sure why they should do it. And I'm actually going to explain, not just in these bullets over here, but I'm going to explain momentarily why you're really going to want to use options, and you're going to see it. If you get the next couple of examples, you're going to learn a lot here, okay? Minimal capital exposure. You could have a couple of bucks at risk. You're actually going to see a ton of my trades, a few bucks at risk, okay? They offer weekly options expirations. So there's expiration every single Friday, but now there's even expiration on a Monday, a Wednesday, and a Friday. Offer incredibly viable risk reward. Risk reward is huge. There's no need for stop orders, okay? You will never use a stop order on an intraday positions. That is so taboo. This stop orders, okay? The one thing that really gets me, people are like, I'm a professional trader. Really use stop orders? Because I made markets for a lot of years. Then I spent 15 years working at a brokerage firm, and I'll tell you right now, stop orders, nobody uses them. The people that survive in this business have really good trade logic, but nobody uses stop orders consistently. And I say that because it's taboo, to say that, but at the same time, if you understand this business, you're never going to use this because you will get stopped out. You just have to get your risk under control. All this could be traded in retirement accounts, avoids mass risk, sheer magnitude and fear produced by futures contracts. Futures contracts, they're not bad. They're just hard to learn with because they're huge, right? Trades do not have to be continually monitored. And of course, the trader can produce returns far beyond max risk in any given position, which basically means you can have a bucket risk and make 10, literally on an intraday basis. So again, you could have some fairly stellar returns over there. So let me get into just a really, really basic example, and I promise I won't spend long on the basics over here. I just want you guys to understand just a little bit about options. So we're going to give you a fictitious stock, and anytime I talk about a fictitious stock, I always talk about a fictitious stock called stock, and stock is trading right at 200. Everything's trading at 200. So on an intraday basis, okay, we're not going to own the stock. We're going to go out there and we're going to trade an option. And for right now, we're just going to talk about call options. For right now, I trade lots of puts, but we have a call option. We're going to trade what's called a 200, okay, call option. And that 200 call option is going to be good for exactly 1 week. So it's good for a week. Do I hold it for a week? No, but it's good for a week. I'm only going to get in and out of it in a day. And that 200 call option is going to cost us approximately $4. Okay. Now, what's a 200 call? For those of you that are brand new to options, never traded an option before in your life, what's a 200 call give you the right to do? And what is a 200 call? Well, a 200 call just gives you the right to buy the stock at 200. Okay, it gives you the right to buy the stock at 200. Do you have to buy the stock at 200? No, nobody said you had to buy the stock at 200. I'm just buying the 200 call. Why? To turn around and sell the 200 call. So like, wait a second. You buy a call, which gives you the right to buy the stock. Yes. And then you just turn around and sell the call? Yeah. What do you have happen here? Well, if you buy a 200 call, you need that stock to go where? You need the stock to go up. Because if the stock goes up, and let's say the stock gets all the way to like 210, this is a really fast moving stock, but let's say it goes from 200 to 210 inside of a day, that thing is no longer worth $4. What's it worth? Well, that option goes from 200, okay, flies up to 210. It's going to be worth at least $10 plus what we call time value. But all I want you to get at this point in time is what a 200 call is. Okay? What is a 200 call? Gives the right to buy the stock at 200. Do you pay something for it? Yes. Okay? But you're paying for that $4 to try to turn your $4 into $10. This is where I'm going to help you. I'm going to help you with, first of all, what an option is worth and what an option is going to be worth if the stock starts to move. Listen, not all stocks go from 200, okay, to 210 immediately. Could you make money? Couldn't you make money if the stock goes from 200 to 201? Could you make money at that? Okay. Or if it goes down to 199, or if the stock goes to 202, or if the stock goes to 198, okay? Can you make money even with those small incremental moves? Of course you can. And that's exactly what we're going to get to. So this 200 call, okay? Never let it intimidate you. Listen, we're just simply buying the call for $4 to try to turn around and sell it a couple hours later, maybe for $8, maybe for $10. But you don't necessarily have to spend $4 to do that. There's going to be options that you could trade for $1. There's going to be options you could trade for literally for 50 cents. And I'm actually going to take you into those examples. But I'm going to just stress this to you. There's a reason we're going to use options. Okay, and I'm really going to lay this out very nicely, very cleanly for you. I'm going to show you all the math behind it, because what you're going to learn about options, right, in just a brief minute. In options, if you pick the right option, okay, you're not going to have to be right even 50% of the time. So one thing that I'm adamant about, I know that every time that you guys go to any webcast, right, okay, and I'm sure lots of people have been to webcasts, all they ever talk about, look at this trade setup, and there's this candle, and there's that candle, and it's a doji star, and it's a flying hanging man doji star, and the stock is going to explode to the upside. You got to get out of that crap, because I'm going to tell you right now, if you want to survive in this business, see that line right there? That's a $200 stock. Let me be very forthright with you. Okay? Let me be very, very forthright with you. 50-50. Okay? I want to assume that you're going to be right 50% of the time. Question is, can you make money? I want you to assume that you're going to be right 50% of the time. And we're going to talk about directional risk. We're going to have a whole party about that. But I want you to assume initially that you're going to be right 50% of the time. Because what people do not get about this business, if you select the right option, you don't have to even be right 50% of the time. Okay? We can give you edge right off the bat. How do you do it? Let's get into it. You guys ready? Because now it's about to get serious. Again, when I started off tonight, I said, 20 minutes from now, it's going to get serious. Okay, here we go. This is the part. Just going to get serious right now in a hurry. Options logic example. In this example, I'm going to buy an option on an intraday basis. That means you're going to be in and out on the same day. Okay, this means you bail out prior to day's end in every case. People don't get that, right? It says you're in, you're out on the same day. That's number one. Number two, big question, which option do you buy? Well, risk versus reward, it's critical. Okay, well, why? This is 100 trades later. This is probably the most prolific thing that they teach in trading firms. And it's something that never really infiltrates, okay? It never really infiltrates to the retail clientele. Now, when I asked somebody earlier, I said, if you're right 50% of the time, can you make money? And immediately somebody said, yeah, if you win bigger, okay? It's not about that. It's not about that. Because that's when people go, I got to risk one to be able to make two. You got to get that crap out of your head. Okay? I'm serious about this too. Because this is where people just don't get it. Listen, this marketplace is nice and fair. We're going up or we're going down. Let's say equidistant. You're going to go up a buck or down a buck. Or you're going to go up $2. You're going to go down $2. In fact, I'll tell you what. For a brief example here. Let's go back to this. Okay? Your assumption has got to be this. This is a $200 stock. Okay? It's going to go up $2 or it's going to go down $2. When's it going to do that? It's going to do it today. You know what? This is an intraday trade, so it's going to do that today. It's either going to go up $2 or it's going to go down $2. I don't want to hear I'm going to get stopped out with $1 here. You got to forget all that crap. You got to come up with a viable strategy, whatever the market's going to throw at you, right? So, okay, in the scenario, in the 100 trades later, in this scenario, you will need to create a trade setup whereby you can be right 50% of the time and still see a degree of profitability. Why? You might not always be correct with your directional bias. I think that that's a fair statement. I'm not anti-charts. I'm just realist. And if people come out there and they're like, you follow what I do, you're always going to make money. No. Okay? Because I'll tell you right now, today is a perfect example. On an intraday basis today, the market was more bullish than bullish can be today. And then the marketplace dropped, what, 60 S&P points. The marketplace plummeted today as the day went on. Why? News broke. That's when you got to look at your trade and go, holy crap. If you were wrong today, you were wrong huge. Okay? Listen, you're not always going to be correct with directional bias. News is going to break. Things are going to happen. Okay? If you could do 100 trades, be right half the time, and still come out ahead, does it interest you? Because now we're going to show you a couple live examples. All right, the first example on the docket. Don't freak out on me. Okay, I say don't freak out on me because what I'm showing you on this screen is a little bit deep. So you're currently looking at the trading application, and let's clarify this. This is the trading application known as Thinkorswim. TOS is Thinkorswim. You don't have to use Thinkorswim. It's fine. Okay. You don't got to use it. You could use, any of them. You could use E-Trade, or Charles Schwab. I use Thinkorswim. Why? Because I've been on here, and helped build a lot of the tools on here, so I'm comfortable with it. But that's okay. I'm moving on. But this is Thinkorswim. So this is the actual stock that we're talking about, which is what? Twitter. I'm just using Twitter for an example. That's the last price, which is $44.60. That's when I took the screenshot. And I want you to look at the option that I highlighted here. Okay? We purchase, and I want you to simulate in your head the purchase of a 44 call. Okay? What is the call option estimated to be worth if the underlying moves up or down $1? Remember, I assume, okay, that you don't know anything about market direction. Is that a fair assumption? You're like, I don't know squat. That's a good assumption. Listen, you're going to buy this option right here. It's trading for about $1.03. Okay. Now, this marketplace here, right here, is either going to go up $1 today or down $1 today. Let me ask you something. Can Twitter move? Can Twitter move? Anybody? Okay. These are not rhetorical questions. Can Twitter move? I wanted to start easy on you. When I say I wanted to start easy, okay, I wanted to start with like a $40 or $50 stock. I needed something that was gentle, that was easy, but at the same time, it's got to be able to move a little bit. I don't want to start with a $200 stock. Okay, we got to we got to ease into this a little bit. So you're gonna buy this option. You're gonna buy it for $1. Okay. What's the option going to be worth if the stock moves $1? What can the stock do? The stock can move up $1 or down $1. Do you know which way it's going to go? No. But in this case, I'm going to buy a call. So if I buy a call on an intraday basis, I hope the stock goes up. I hope it goes up. But all right, we're not going to worry about that. So the easiest way to figure out what this option is worth, the 44 call, if this stock starts to move, okay, just look at the 43 call and the 45 call. And you're like, what? All right, this is something that even the most experienced traders that are going to be joining us tonight, okay, even the most experienced traders, they don't get this. They don't understand what I'm talking about. It's called a strike price shift increment. It's one of the first things they teach, okay, traders in the professional world. They say if you want to know what a 44 call is going to be worth, if the stock goes up $1, the 44 call would be worth what the 43 call is trading for right now. And you go, well, why? Because what's the difference? This option just goes $1, okay, for you. So the option is worth $1.03. It would be worth basically $1.79. Okay. Conversely, if the stock went down $1, your $1.03 is not going to be worth $1.03. $1.03 is going to be worth about 50 cents, right? So what's a 44 call worth if the stock moves up $1? It's going to be worth about $1.79. And if we move down $1, it's going to be worth what? About 50 cents. Does this make sense to people? Okay? Does this make sense to people? Because the first time you see it, it totally blows your mind. And this, by the way, this will be accurate within about 3 or 4 pennies. No if and or but about it. Even if volatility changes, this is a short duration option, so they ain't going to make a difference. There's no volatility really in the short duration options. It's going to be accurate within literally a few pennies, and it's deadly accurate. If we move exactly $1, you're going to see your $1.03 is going to be worth $1.79. So let's do some quick math, okay? Because if you've never seen this before, you know, it might be a little bit, you know, sometimes a little hamster gets stuck in the wheel. Here, okay? If we have $1.79, $1.79, okay? I want you to subtract, okay, $1.03. What have I got? I got 76 cents, okay? So what happens? If I'm right, I'm going to make 76 cents. Okay, now let's put that 76 cents, okay, down here, because I want to make a quick point with this so everybody gets it. Because this is, by the way, the first example I spend the most time on. After this, it's going to get crazy, right? So if I'm right on this example and the stock moves in my direction, I'm going to make approximately 76 cents. Okay? Now, what happens if I'm wrong? If I'm wrong, my $1.03 is only going to be worth 50 cents, which is what? You know, boop, 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 53 cents. Okay? So if I'm wrong, I'm going to lose what? Approximately, okay, 53 cents. Now, people are like, what about commissions? Commissions are pretty cheap these days, about 65 cents, but I don't care. You know what? Here, you want to get, let's get crazy. Let's make this instead of 53 cents. Let's make it, if you're wrong, you're going to lose 55 cents. Okay? Are we fair now? So here, I'll write those up there again. If you're right, you're going to make 76 cents. But if you're wrong, you're going to lose 55 cents. Okay? Would I do that trade? Would you do it? Okay? And this is not I'm not trying to be facetious in any way, shape, or form. Would you do the trade? Okay? Of course you would do the trade. Okay? But this option selection is fairly critical. All I'm trying to show you, okay? All I'm trying to show you here to begin with, we go up $1, we go down $1. I can't influence where this thing goes. I can't influence it. I can do my best technical analysis, my best everything. But you have to understand that the option selection, it's everything. Because some people go, no, Don, you should have been buying this option here for 50 cents. Really? Okay? Because I'll put that one to the test all day long. Okay? And twice tomorrow. If I'm right, I make 76 cents. Okay? If I'm wrong, I lose 55 cents. How often do I have to be right in here? Because I told you. Okay? I first and foremost want you to understand trade logic. And what trade logic means is if you flip the coin for directional bias. Flipped a coin for directional bias. Okay? Does this work? Does this work? There's edge in here. Okay? There's absolutely edge. And the one thing, okay, that I will always provide first and foremost is edge. Does that make sense? The first example, is it resonating with anybody? Okay? Because this is where you're like, okay, so if I'm right, I make 76 cents. If I'm wrong, I lose 55 cents. Right, but I'm starting with a $44 stock. This is going to get a little bit more serious. We're going to start to ramp it up a little bit because that's the beginnings of it. The next one's going to be Intel. Again, I had to start. I got to be gentle. Okay, Intel is a $52 product. So in this case, slightly different option selection. In this case, we're picking a 52, again, a 52 call. And I'm just using calls right now. Of course, I could do this with puts, but this is just calls. So a 52 call gives me the right to buy the stock at 52. What did I have to pay for the 52 call? 45 cents. So 45 cents. The question is, though, what is this little monkey worth if the stock moves up or down $1? So I'm still going to use $1 up, okay, or down $1, because that's where the stock can easily go. Easily go, right? So it's Intel. Look, it was actually up 85 cents when I did this, which is kind of cool because it just, again, explains that obviously it can move up $1. So up $1, down $1. So what's my 52 call going to be worth if we move up $1? 45 cents is going to be worth what? About $1.23. Okay. And if I'm wrong, my 45 cents is going to be worth what? About 11 cents. Okay. So should we whip out the trusted calculator? Because I just want to make sure that everybody sees. I don't want to pull numbers out of thin air, and I want to make sure everybody sees exactly what we're referencing. So in here, okay, I would go out. My 45 cents would be worth $1.23. Stick $1.23, okay, minus obviously the 45 cents equals about 78 cents. Okay, so 78 cents. So in this particular case, if I am correct in my trade logic, okay, I'm making what, right? Well, that's worth about. Here, let's just make it an even 75 cents. Now, you guys tell me, if I'm dead wrong, okay, if I'm dead wrong in here, what am I going to lose? All right, what am I going to lose? Come on, let's just make this an even 10 cents, okay? I'm going to lose about 35 cents. I'm going to lose about 35 cents, okay? Does that make sense? Just from a pure risk-reward standpoint, okay? And I got to stress to you again, how often do you have to be right in this example? Not very. Okay? And again, we're going to continue to forge forward. I just want you to see that this doesn't just work in Twitter, doesn't just work in Intel. I wanted to start off again, easy on you. Up a buck, okay, down a buck kind of stuff, right? Goes from the 52 to the 51, or from the 52 and drops down here to the 53. So here you would lose about 35 cents, right? 35 cents if you're wrong. Here, okay, just round it. You know what? Even if you can make 70 cents from that thing, it's huge. That's the point that I want to make. And you have to be able to spot this almost instantaneously, because if you're missing that, you're missing a lot of trade logic, right? Let me continue on over here. Now let's go to the spiders. Okay. Now the spiders are going to amp this up a little bit. It's pretty quiet tonight. I think everybody's okay. So here's the spiders. Now the spiders, when I say I'm going to amp it up a little bit, spiders can move. All right. Spiders, when I say they can move, here, today, they were up $4.58 when I took this screenshot. That was today. Now, I'm just going to say they can move up or down $2. Clearly, they can move more than $2. Okay? Clearly, they can move more than $2. This, okay, this is an example. Because let's say they can move up $2 or down $2. Let me ask you something. Did the spiders do that today? When I say the spiders do that today, did they go up $2 or down $2 today? You see a $4 move here. How about this? Okay, they went up massively. They were up 6. Then they sold off. Then they rallied back. We laughed. We cried. If you missed today's trade, it was totally manic. Okay, let me explain. Here we have an option for 95 cents. Now let's actually assume a $2 move higher or a $2 move lower. Let's do it. So the 337s we're trading for 95 cents are now going to be trading for what? About $2.34. Or, okay, this thing is going to drop. I'm going to tell you what, to 0. Why is that option going to be worth 0? You don't have to look any further, okay? It's about risk reward, okay? Up $2, down $2. Apologize for that. So if it works for me, I'm going to make, you know what? If it goes up $2 or it's going to go down $2. Why is the option going to immediately drop to 0? Anybody? Why is this option going to drop to zero? So either the option is going to be worth about $2.34 or it's going to be worth zero. Anybody see why? Okay. Why is it going to be worth zero? Some people got it. This happened to be an option that literally expired today. It expired today. So what can I make on here and what can I lose on here? Right? Let's actually break this down a little bit. When I say what can I make, what can I lose? Here, what can I make? My 95 cents can be worth basically, let's call it 235, right? So what can I actually make on here? About a dollar. Do I guys want to call it like $1.40-ish? I can make about $1.40. What can I lose? I can lose the full 95 cents. That's it. Take a look at this. Now, get out your trusted directional indicator. What's your trusted directional indicator? A quarter. Heads, you make $1.40. Tails, you lose 95 cents. Do you understand where we're going with trade logic? Okay? Because this is one of the more important things that you're ever going to see, okay, in the business. And it's something that, again, people think it's, it's a magical mythical beast that makes you money, and it's a MACD and it's a Fibonacci, and you got to know where your 618 is. And listen, how about you just have to have the right option selection? Because option selection criteria is everything. And it's just missed. People buy options out here. They buy the wrong option. You have to pinpoint exactly what option to buy, exactly, okay, which one to go after, the right expiration cycle. That's part of it, okay? Listen to the trade logic implications here. In constructing any intraday trade, your option selection is just imperative. In the previous examples, we could be right directionally less than 50% of the time and still come out ahead. Can your strategy do that? You got to ask yourself those questions. I can't answer that for you, but when I ask you that, can your strategy do just what I explained? I mean, you could trade stock all day, but stock, what? Stock, you're going to make a buck, you're going to lose a buck. Futures, you're going to make a buck, you're going to lose a buck. Options, okay, you're going to make $1.35, you're going to lose like 95 cents. That's viability right there. There's edge just in the trade itself. That's before we've even talked about what? It's before we've even talked about, directional bias. And if people, you got to lay this out right. If you can go out there and you can do a trade like I did in Intel, and you can make 70 cents, okay, if you're right, or, all right, lose, let's even call it 40 cents if you're wrong, all right? That right there has edge, huge edge, because you can be literally right less than 50% of the time. You want to survive in the business, you must put trade logic. Think about the implications of selecting a strategy that can provide a degree of edge in the markets before we've even discussed direction of the markets. And that's why I say long live trade logic. And that's what trading firms base billions of dollars on. Okay? And people they get into this business, they don't have strategy. Okay? They don't have logic. They don't get it. Right? And that's you have to get with the strategies. And the strategy is never going to be, it's not going to be the technical setup. And I'm no problem, again, with technical setups. You want to do the MACD, the Fibonacci, throw a little Elliott wave here, on the side. But that's not going to do it for me. What does it for me? I'm a quantitative trader. If you cannot explain mathematically why I'm going to make money, then forget it. I'm not going to listen for more than 2 seconds. Right? That's what trade logic is about. What our members are saying. Okay? And I absolutely love this quote to the point where I literally clipped the quote out of TheoTrade's chat room. It came in July 30th, all right, at 9:08. That was actually my time, which is Pacific time. Comes in from Jamie G. Okay? I trade pretty small. I like the intraday options because chances are your losses will be small and your winners big. I have made 10 QQQ intraday trades the past few weeks. I lost 7 of them, but I'm profitable because the winners were huge. And I just absolutely love that statement because if I can get just one of those, like one person, I don't need everybody, okay? There are 6,000 people in the TheoTrade chat room. And that to me is the most important statement right there, okay? This guy's actually right 7 out of 10 times, and he's up, he's up money. He's profitable. If you can actually, 7 out of 10 times be profitable, Think about what you can do if you, because a lot of people believe that, oh, no, I'm going to be right more than I'm going to wrong. Listen, if you're going to be right more than you're wrong, think about what you could do with the right option selection, right? It's huge, okay? This is how you have to approach intraday trade. Now, okay, let's compound this a little bit. Directional bias. Finally, let's approach our directional bias. After all, that's what everybody's always here for, right? Everybody wants a little foresight in the marketplace, okay? I'm going to give you what I call the quant's guide to directional market, right? So when I talk about, the quant's guide, and that's so some people are familiar with that terminology, some people are not. Let me explain what a quant is. And I've mentioned it a couple times. I am a very quantitative trader, and it means I'm a trader math geek. Any any strategy, and I just said this about 3 minutes ago, but any strategy that I present, it has to have, okay, some type of mathematical logic. It's got to be based on probabilities. It's got to be based on outcomes. If you, again, can't sit there and proof to me what is going on, when I say proof, I mean like an actual proof, and mathematically display it, it ain't going to work for me. Quants do not typically rely on charts and studies, but we look at probabilities, relationships, okay? Anything to seek statistical edge in the markets. That's what it's about, all right? If you're not familiar with quant geeks, just don't worry about it. I'm going to go over throughout this presentation, okay, why and how quantitative analysis will likely become your best new friend. So I found a great little saying over here. It's a geek is the new sexy. When I was a kid, I'm in my mid 40s now, but when I was a kid, you called somebody a geek. That was like a massive insult. You're such a geek. It was a huge insult. Now, okay, it's like the millionaire or billionaire boys club. It's horrible. Geek has become the new sexy. Okay, and Silicon Valley is loaded. It's geek. People are literally driving around in cars. The Geek Squad. So geek has become the new sexy out there. Now, with this and the idea of being a geek and a quant geek, let me explain what that means. Markets speak volumes. Trading, okay, for you needs to be about reading into market relationships. All right. So people, when they trade, they don't really look at market relationships. Reading market relationships can help you construct a probability-based outcome on an intraday basis. So what I'm going to go out and do, okay, is twofold. Number one, I want to select the right option, right? When I say the right option, I want to select an option that gives me 70 cents when I'm right. I only lose 40 cents when I'm wrong, okay? That is the first thing I'm going to do. On top of it, to compound it, I'm actually going to teach you right now a little bit about market relationships. Because what a market relationship can do, it can attempt to tip the odds in your favor to give you, all right, a higher probability of making that 70 cents rather than losing the 40 cents. So everything has to be, several fold. I don't just go into a strategy and go, I think we're going down. That doesn't work. I don't think, anything. I have to know something, and I got to know that there's mathematical logic to it. What most people learn in trading is myopic. Very myopic. Are you guilty of it? When I say myopic trading, sorry to tell you, but most traders focus on one product, one stock, one future, or otherwise. Myopic traders, they're those focusing on one product, and they fail to see the larger probability, for instance, of an impending sell-off. Okay? Have you ever done that before? Anybody? Okay? Anybody? Anybody here has ever done that? Maybe. Okay. When I say that, like you were so focused on some stock, and it's happened to us all. Again, nobody ever wants to admit that, but there is a cure. So myopic, it's just you're basically just dead focused on one stock. Here, I'll show you what it means. Okay. This is Microsoft today. All right. That's Microsoft today. And if you take a quick glance at Microsoft, and again, when I say today, it was earlier today, the stock was actually on a tear to the upside. And right there, I took the screenshot because the stock was actually breaking out to the upside, right? Okay. So this is, I guess, the plight of somebody that's looking at one individual chart. Anybody ever done this? Maybe. Okay. It's pretty quiet. So this is the plight of the directional trader. So most people, they would look for a signal like this because, again, this is almost like a breakout to the upside. Except, again, what you really saw was absolutely nothing. What you actually saw was the stock. Effectively, that was right here. It was topping. It was topping, and it did nothing but top out at that particular point and then produce some sell side activity. The only point that I want to make with this is, you know, looking at stuff like in hindsight is always, it's like it literally becomes comical. This is a huge breakout to the upside. That was actually the high tick. That's why I took the screenshot there. It was literally, it ticked up and pulled back thereafter. And that's what myopic trading basically means. And you know what? This wasn't even the end of the day. I just took the screenshot early on today. All I wanted to display to you is, all the brilliance in the world doesn't see the sell side activity. By the way, this marketplace, if you missed it today, let me actually bring you into what occurred today. This happens to be none other than the spiders. Okay, this is the spiders. And there couldn't be a better day to explain what myopic trading simply means. And that's simply this. Okay, this is a marketplace that was running hot all day. It is literally exploding to the upside right until it dropped you on your head. The wrong strategy in here, you were done. I know this doesn't look like a huge move, but do you realize, okay, it went from 338, okay, to 335. That is a minus $3 move, okay? And if you zoom in on this, and again, you've got to pay attention to this, but if you zoom in on this, all right, that is 1, 2, 3, 4 minutes. These are 1 minute bars, okay? A 4-minute period of time where the product sold off almost a full $3, okay? And a $3 move in the spiders is absolutely monumental. By the way, it got much worse minutes after that. Nobody got out of this alive if they were long. Okay, it happened too fast. People were getting stopped out left and right. Okay, it was over, and then we rallied right back into it. And most people were bailing out down here. We rallied right back, only to drop back down after the market. But I wanted to display that because it exemplifies this idea. It exemplifies the idea of being myopic when you're just so focused and you just miss, okay, what's really going on in the marketplace. Now I'm going to give you probability-based outcomes. Even intraday trade is based on probability. It's based on outcomes. You can actually develop an intraday probability model via looking at several selected products, which is what we're going to do. When I say products, we're going to look at a couple of different things on a screen, right? We're going to look at some stocks, some options, a couple of futures over here. We're going to create a higher probability outcome for intraday trades, right? Higher probability outcome. How can this be done? I'm going to show you. Allow us, okay, to review a few products, okay, that can allow you to create a viable intraday probability. You ready? Here we go. This is gonna get a little bit crazy. This is an intraday checklist, and I'm just gonna take you through some of the logic over here. So again, all right, this is not the primary way to make money. The primary way we're making money is the right option selection, right? This is down the road. When I say a probability-based outcome, listen, this is part of an intraday checklist. When I say a checklist, you look at the S&P 500, check. You look at the NASDAQ, check. There's the S&P 500. There's the NASDAQ. You look at bonds. Most people don't even know what bonds are. Okay, check. You look at volatility futures. There they are. Look at that. They're up 20 cents. Check. You look at the advanced decline line, Quantix, which we showed you a little bit earlier, right? And we're giving you Quantix tonight. You're going to look at the monsters of tech. Here's the monsters of tech. Ooh, they're telling you something there. You're going to look at the financials. You're going to look at the energy sector, okay? If you know the correct products to watch and what to look for, you can actually create a probability-based outcome and an incredible, okay, viability to intraday setup. What I'm referencing here, and all I did is just list a couple of things, just a handful of things, because I just want to explain on the surface how to do this. Believe me, if this is the first time you've ever seen an example like this, there is no way that you're going to comprehend this too detailed, and that's okay. All I want you to understand is big, broad strokes of logic, okay? This is the S&Ps and the NASDAQ early in the day. They're running higher, okay? And they actually ran much higher than this before selling off, but they were running higher, Okay? As you start to go down the list, what you're doing is you're with equal weighting, and I want to say this again, with equal weighting, you're assigning, okay, little checks to them. This is bullish. This is bullish. Okay. And how do I know it's bullish? I mean, first of all, it's up, huge. This is up huge. When I say this, okay, the S&Ps are up huge, right? Almost 1%. The Nasdaq, well, the Nasdaq is a little bit weak versus the S&Ps. The Dow is running hot. See the Russell over here? Big question mark over there. The Russell, that's actually bearish. That's very bearish. Here's a great indication right there. The volatility futures, bearish. Okay, so as you start going through your little checklist over here, the bonds are actually down big. Now, the bonds are down big, which is actually going to feed into the financials. They absolutely love it. What I'm doing is going to go through a handful of products. Imagine, okay, that you have 10 products, okay, and only 6 out of the 10 are bullish. Is that a wildly bullish day? No. Okay, but you have a 60% chance of continued movement to the upside. In this particular case, and I'm just throwing out, in this case, this is bullish, this is bullish, this is bullish. Okay, this one happens to be bearish. This one happens to be bearish. Okay, the dollar also very slightly bearish. Most people aren't aware of that. Right, you got to know what products. This is wildly bullish. This is wildly bullish. Look down the list of the usual suspects. In this trade, what was so unusual is today we were running up. There's about a 70% chance that we're going to continue to run to the upside, and we did. Those S&Ps were actually up, okay, 60 at one portion of the day. They were literally only on a 70% probability. But what I'm getting to, okay, is if you know exactly what products to look at, once you know what to look at, you can actually create a probability-based outcome in an instant. And you get better at this, and you just have a checklist, and you literally go check 1, check 2, check 3, right? And you learn how to actually read into relationships. This is what traders do. They look at that volatility and something's wrong in there. That's just wrong. Why is that up today? I'll tell you why the volatility futures are up. Because they knew that there was a meeting going on, between, Mnuchin, ultimately, and Pelosi. Volatility futures knew it. They knew there was the risk of selling off today. Okay, the dollar, it knew it. It knew the risk was there of selling off today. And you go down the list, okay, and a 70% chance of moving to the upside over there, maybe it's good enough for a trade. But that's not the trade itself. You got to find the right option. The 70% is, again, it's tertiary. That's just icing the cake on your trade. Does that make sense? Okay? Because again, the first time you go through this, it's a lot to actually take. By the way, you could do this at any point in time. That's just my watch list. Okay? That's all I do. And I'll tell you what, okay? Where did the marketplace end up? As I said, right? When I took that screenshot earlier today, the S&Ps were what? We're over here this morning. Okay? They're over here. We exploded higher to fall flat on our face, but there was viability to today's trade. Okay? And that's what you got to learn. Listen, there's key factors to intraday success. First, you must employ a viable trade logic as displayed with the use of options. Number 2, you're going to use a multitude of quantitative indicators to assist you in creating a higher probability intraday setup. So is the right trade logic coupled with our quantitative approach to directional bias, is this what you've been looking for? Because again, a lot of people that just go into the marketplace without really rhyme nor reason. They just basically, somebody tweeted I should buy calls, so I buy calls. Okay, you got to pick the right option. You got to have more than just looking at a MACD and a Fibonacci and a Bollinger Band. So with that, I thought it was a good time. I'm actually going to show you, okay? I'm going to show you quite a bit right now, right, about my own trades. And I'm going to show you a little history of them. I'm going to start all the way back here in May because I want to show you the types of trades that I do. And, by the way, I will trade every single day. I will literally trade every single day. Okay, there's not too many days that go by like I don't trade. And by the way, when I say I trade every single day, somebody, well, how do we know you trade every day? Here, you know what this is? This is an account statement. Okay, and take the symbol out of there. This is the last 30 days. Just the last 30 days. Here you go. There's everything I've done over the last 30 days in this particular account. With all due respect, I have another account over here. So I've only got 19 fills in this account. In this account, I've actually got 104 fills, 102 orders, right? I've also got a Tastyworks account where I started trading very heavily over there. But again, this is, here, I'll close up this left side bar. This is full everything, Okay, I want you guys to understand that you can see everything that I do, and it's a fully funded account. Like, people always ask, and I'm going to show you, everything from balances, show everything. There's no, that's for 30 days. So for the last 30 days, you don't have to be as trading as much as I do. Okay, I mean, this is what I do. It's for the last 22 years. I've made a pretty good career trading. Obviously, I was involved in a startup brokerage firm. That didn't hurt. But, I don't think I'm like a hyper crazed. There's people that trade 104 times in a day. So that's what I did over the last 30 days in this account. If I added up everything, I'm probably closer to about 170 trades, I would guess, in the last 30 days. And this last 30 days hasn't been that busy. If you start looking back a little bit in time, okay, and again, I like to show this stuff because you guys got to know. Like, if you're going to listen to somebody about trading, they actually do trade. Here's 70 days, about 300 fills. We'll go back a little bit further. Go a full 180 days. Why am I going 180 days? This starts to encompass when I was really getting crazy. Almost 700 fills in that time frame. And literally, I don't mind showing every single trade that I do. This is my account. This ain't paper trading, people. This is Thinkorswim, if you know the platform. Okay. So again, I don't want you guys to think I'm like a hyper crazed day trader, but I also want you to realize that I will show you every single trade. Okay, in everything that I do always. So with that, I'm actually going to show you a couple of my trades. And I took some screenshots here for you. We will also go into the live trading application here, but I just wanted to show you intraday trades. Okay, and I'm not going to show you just great trades. I'm going to show you some trades where I lost money too. But I just wanted to show you a little history because this isn't something that I just jump into yesterday. I could show you a history of these trades for 5 years plus just with a click of a mouse here. But this is actually May 1st, okay? Exited on May 1st. Entered it just after the cash open. Exited a few hours later. Okay, what you're looking at is single buy to open. I paid $1.98. I exited this one for $4.75. All I'm doing right now is just giving you orientation of what we're looking at on the screen. This is to open, this is to close. It's every $198 I invested, I got back $4.75. It's 140% return in a few hours. Time out. Time out. Did I have to do this, okay, for $198? Did I have to pay $198? That's the lowest risk, okay? But I could have actually done 10 contracts. If I did 10 contracts, this is $1,980. So it's $1,980 to be able to make $4,750. It's not a half bad day, okay? So that's just in May. I just threw a quick trade out to you because I just wanted to give you orientation. But I want to show you a little bit of history. So that's May. And we'll forward. Here's one I actually did on Intel. And I selected this Intel one simply because I just showed you Intel a moment ago. This is not exactly spellbinding stuff over here. Here, paid $1.83. Here, $2.05. This is what I call a punt. Okay, here's a day. I was wrong. I just didn't do well to that day. Right? I entered the trade at 7:02. I exited right before the close. Okay, that's it. Did I lose money? No. Every $183 I invested, I got back $2.05. It's a whopping 12% return. But I just want to show you right off the bat, not every trades are going to go your direction. That doesn't exactly matter. Okay, so again, just trying to show you a little bit of recourse, a little bit of history in here. So I'll jump forward to July, and then I'm going to show you some more recent trades. This is the QQQ. Okay, the QQQ. July 7th, exited July 7th. Here's one where, again, I opened it 4 minutes into the trading day. I closed it right at the end of the day. As I said, I'm not going to sit there and monitor it throughout the course of the day. Okay, open, close. Every 378 I invested, I got back 594. It's a 57% return. Next. Okay, here again, spiders. All right, now, spiders. This is where things start to get a little bit interesting. Okay, so on the spiders, this one's actually entered into June 23rd, exited June 23rd. In this particular trade, the reason I pulled this one up, okay, this is a much more recent example, but the reason I pulled this one up, I actually was out most of the morning. That was put on in the last hour of trade. Remember, I'm on Pacific time. This was actually put on at 12. This was actually closed 2 minutes after the bell. Okay, every, what, 303 I invested, $303 I invested, I got back 365. It's a 20% return. Ain't half bad though for a few minutes inside of a trading day. I literally only had an hour that day. Okay, continuing on over here. All right, here's one. Okay, complete miss. When I say a complete miss, this one is June, okay, 22nd. I went out there, took a swing. I actually bought the 310 puts for 62 cents. They expired worthless. I told you I'd show you losing trades. You got to have losing trades. Those expired worthless. There's nothing you could do about it. Look at June 22nd. Must have been expiration day. Because if it's expiration day, those are going out, and they're going out worthless. It's 100% loss. All right? What do? You can't stop trading. All right? So here's another one. Okay? So again, all I'm doing is just showing you a smattering of intraday trades throughout the course of this summer. This one is actually in July 7th, closed also July 7th. Okay? To open, to close, this is a 317 put, 317 put. Okay? Every $237 I invested, got back 387. Okay? This is a 60, sorry, this should say 387. That's a 63% return. Okay, on there. By the way, all the trades that I'm showing you, these are all trades that are done, right? Okay, by the way, somebody was asking if they're one lots. No, so one of the things that one of the things that I do, I don't want people ever following contract size. So I will trade one lots most of the time in front of people, but I'll show you the actual contract size here momentarily because I think that that's something that comes up a lot is like, how many contracts are you doing? So between a couple of accounts, well, I'm going to show you the account statement in a moment. I'm moving anywhere between $600,000-$700,000 if I include the IRA over at Tasty. I'm just north of about $1 million of capital. So frankly, I can't trade one lots unless I'm just playing around a little bit. I will actually size some trades up. I try almost exclusively when people are learning this to get them to trade one contract because literally one contract's $237 to be able to make $387. The 63% return ain't half bad. Be capped in one lot. That's okay. And as I was saying, we do all the trades in front of clientele, right? Every single trade is done. Thanks, nice profits. Have a great weekend. Ali here made $1,458 today. Techniques I learned at TheoTrade. Diamond, Dawn, you're amazing. Jamie G, thanks. Out for 752. All right, let's get a little bit more serious now. Okay. Now we're actually going to show you. This is a SPY trade. In the spider trade, it's open July 13th, closed in July 13th. And let's assume that this is a one contract trade. Okay. $88 to be able to make 717. Okay. So every $88 I invested, I got back 717. It's 715% return. These, are they frequent? Nah, you'd probably hit these every 2 weeks. Okay. But every 2 weeks, we'll actually hit one that hits actually big for big percentages. And this is exactly why we do this strategy. I bought SPY puts to open, sold SPY puts to close, huge percentage gains, 322 put. Okay. Nothing done. This is not one that, again, had to be heavily monitored. If you take a look at the entry and exit of this particular trade, it was put on, about an hour and a half after the open. It was closed minutes before the cash close. And you'll always see this, okay? This strategy that I'm showing you right now, I could sit there all day long and I could buy stock and I could sell stock and I could buy options, I could sell options, and I can turn some profit. But what I'm showing you right now is absolutely unequivocally hands off. Okay, this one's, it's just totally hands off. I just don't, I don't want to sit there all day with clientele because it's next to impossible. Like people can follow me into one or two trades every single day, right? They can't follow me though into, 20, 30 trades. So I like to do the one or two trades every single day in the chat room and then they follow me in. Look, okay, from this particular day. Woohoo! Thanks, Don. Absolute home run. Nice, Don. Lexus, plan your trade your plan, stay in the game. Okay, get your Don dollars here. In fact, clientele are even posting their fills in here. This gentleman, Haram, actually opened the trade for 51 cents, closed it for 7.30. He beat me, right? All right, Marino. So these are all traders that were in the trade that particular day. And actually, if you look at the exact time of the trade, I exited at 12:51. These are all trades that are being broadcast live. This gentleman actually posted at 12:53, 12:55, 12:52, 12:52. So these people are posting literally what they made, okay, and what they they lost, on a given trade. So here's another one, actually, QQQ puts to open. This is actually a 9.9. I actually bought these for 462, closed them for 553. Every $462 I invested, I got back 553. It's a 20% return. Here's another one. By the way, I wanted to switch it up a little bit in this particular trade. On this trade, you're actually looking at Tastyworks. This is a little bit different. So this is the filled. This is the actual price I paid. This is the price I got out. By the way, you're curious about this? This was actually one that I did a one lot. Boy, I was upset that I did a one lot on this one because I'll tell you what, this is an absolute grand slam home run. I paid 164 for it. I closed it for almost 13 bucks, $12.95. Every $164 I invested, I got back 1,295, 690% return. So I like to show trades like that, but here, look, this is also right there. That little monkey is emailed to you. So I actually put the exact time, the date, everything in here because I figured this is a little weird. This is a trade, though, that was actually opened at 6:37. It was already closed by 7:40. That was a fast. I was in, I was out, and this is a day, again, a fairly busy day. I only traded one contract. So if you're curious about contract size, listen, I don't have a chip on my shoulder that I have to trade 100 lots here. Okay, and I hope you guys want to understand that because you're going to get people with $2,000 accounts. There's going to be people with $1 million accounts, $2 million accounts. I'm going to tell you right now, $1 million plus in my account, I traded a one lot. Why? Okay, because this was actually a fast, furious market day. It was just ripping out there. And to trade more than one contract on that particular day would have just been abject stupidity, no matter what size the account. And I don't mind saying that because people get real cocky about size and so forth. You don't have to walk in here with a chip on your shoulder. Trade small, stay alive. You want to make money? This is the way to do it. You go out there, risk 164 bucks to be able to make almost $1,300 inside of an hour. That's a trade. I think that's important that you see that somebody, and I'll show you the account size here momentarily, that somebody has $1 million in their account and still trades a one lot. Okay. Here's another trade. This is actually a stock trade, and I wanted to throw this one in here because I don't want to completely exclude the idea of stock, but this is actually one where I went out. Again, I wanted to show you more recent trades, so I threw a couple of stock trades in here as well. This is a Microsoft trade where I went out and actually shorted stock at 208.61, bought it back for 205. Remember, this is the open, this is the close, so it's a stock trade. Okay, the return, $3 inside of that. For those interested, okay, this was just a few hundred shares. Here's another one back to the QQQ, right? If you're kind of familiar with the QQQ, here we go. So in this QQQ trade, every $321 I invested, I got back 400. This is a 25% return. Okay, obviously this is a tasty trade, right? And here's one that I actually did today. So this is a trade literally from today. So here's time, date, everything. Now this one I did. So you guys see it on here. This is actually a 10 lot. So this one's a 10 lot. This is actually this morning's fill. Okay. This morning's close. This is not exactly like a grand slam home run, but today for every $1.07 for $107 I invested, I got back 200. It's an 87% return. My exact trade fill. So I had $1,070 invested to get exactly $2,000. So it's not bad. It's about $1,000 P&L on a day. And this is another one, and I wanted to show you this. This was not being heavily monitored throughout the course of the day. I'm going to tell you something about this trade. When we opened the market this morning, okay, take a look at the actual trade. When we opened the market this morning, the directional bias that I had, and I want to clarify something here. The trade that you're looking at, okay, I bought a what? This is a put, right? This is a little weird to look at like, the Tastyworks, okay? So I bought a put, and you can see bought, SPY, put the 335 puts for $1.07. The exact time, date, everything that I filled at. The reason that I'm displaying this one, and I really want to kind of hammer this home, people, I couldn't have been more wrong. The market did nothing but at 7 o'clock, but shot straight up from here. That $1.07 was absolutely toast. Coming into like later in the day, I got a little news, my favorite, boom, it dropped. Okay, I ended up with a huge profit. To get an 87% return out of this one, it's a gift. It's a gift. So don't look the gift horse in the mouth. Okay. Listen, what our members are saying. This is from Daniel Fabian. Hey guys, new member here. Been lurking. Okay, the chat for about a month. Okay, we're short the SPY. TheoTrade is the only membership that I've ever had that pays for itself and then some. Brent W. You won't find a more supportive, okay, a more profitable room anywhere in the retail business. Okay, Ali, Don helped me pay for a 1-year TheoTrade subscription with the QQQ. This one, by the way, wasn't today. This was back a little ways. It took a little smattering out of our chat room to display that. I mean, we're showing you a skill set here. And again, I just wanted to give you a couple of little trades so you just get to understand what we're trying to do on a day-to-day basis. This is not about just hitting grand slam home runs. It's about consistency. I wanted to show you. And again, I can show you hundreds and hundreds of trades. And that's why I said, listen, we trade. This is the last 7 days. 7 days, I only have 16 fills in this account. That's actually light. Okay. Again, I average the last 30 days about 100 trades every 30 days. If I knock this out to like 60 days, again, you can see everything that we're doing. And that's important to me. And there's no, people, the only thing I ever try to tell people is don't worry about my contract size. Don't worry about my contract size because, sometimes I trade big. Okay. And it has nothing to do with, one day I do 10 here and the next day, look, I did one over here. I did one contract over here because I already had, okay, huge bearish positions on it. I didn't feel the necessity to get more bearish. Again, I don't walk in with that attitude. You just can't have that. You're trading over 22 years, okay? This is about one thing. It's about making a living. That's it. You got to go in there. You got to get it done. You got to keep moving on. And that's why I wanted to show you a trade right up till today. Hey, this one, I thought today for sure I'm going to be showing you, a losing trade. I really thought that today. This one pulled it out at the close, okay? Almost every trade also that I'm opening and closing, if you notice, I'm opening them right in the beginning of the day and closing them right before the close. I'm not monitoring these trades. I'm sitting there, laying back and letting fly. Why? Because I have a very comfortable amount of risk. I have the right option, and I know that I can be right even less than 50% of the time and still make money, right? I mean, right now, what better time? Learn a new skill. Stuff will last you forever, okay? When are you ever going to have time like this again? Most people are still pretty much working from home. Most people are still trading. If you're still working, you can do this very part-time, but if you're quarantined or just, at home kind of working, this is how to emerge stronger in great financial shape. And I'm going to tell you, the volatility is not going to die down. And if you want to see what's capable in volatility, look, what's possible in extreme volatility. What you're actually looking at here, okay, are my account statements. So this is a history of 1, 2, 3, 4 periods in time. 4 periods in time starting back in February 23rd, 2020. Ending, the last screenshot I took, it's just about a week ago, okay? This is an IRA. Again, this is an IRA account. The account actually started at $211,000 is now at $621,000, 683 cents, or sorry, $683. So again, the account has had a phenomenal year, but this is what I live for. It's volatility. I don't want to tell you that every single year is going to be like this, okay? Because I want to give you a fair shot at this, okay? This kind of volatility is unbelievable. Like you can't sign up for better volatility than what you're seeing. Here's a week in February, at the beginning of the onset of the Corona crisis, took the account from 211, 248 inside of a week. Okay, exactly a month later, and again, you're looking at 5-day net liquidating values. Exactly a month later, the account's from 248 to 305. Right? This wasn't even a big week. Okay, I don't mind showing you. Look, that week we went from 305 to 308, kind of lackluster. Okay, a few more months later, now we're in mid-July. The account's from 392. Okay, look, 392 to 392. You know what I did this week? Squat! I didn't make anything that week. I don't mind showing you that. Okay, but again, this week, this is about 10 days ago. This is the onset of more volatility. As soon as volatility started kicking in, again, look at my account. It went 609 to 621. And I love to show that stuff because it's an IRA account. I don't have any, there's no super secret squirrel stuff out of here. I just wanted to show you 4 periods in time, right, where you can actually see the account grow. And people always ask, what kind of trades were you doing back in this time frame to make, it's $100,000? Okay, I'll show you exactly what kind of. I mean, listen, as I said, this is no holds barred, right? You want to see exactly what I was doing? Here, let's even go back. Watch this. 300 days. I'm going to go back 300 days. I'm just going to isolate to one product just to make it a quick display here. Okay? I'm actually going to take you a little trip down memory lane. This is the XLU. This is the utility sector. You want to know what the kind of stuff that I do in the utility sector? Look at this. I went out and I opened up a trade. Okay? And I did some pretty serious contract size over here. This is a customized trade. I opened this trade for 98 cents and 96 cents. Right? You're looking at the actual, by the way, what you're looking at over here is a live account. What you're looking at over here is 300 days back. This is just one product, the XLU. That's something I put on for 96 cents. Closed for $5, $5, $5. Got out of this one at $12.72. You pay a buck for something that you get out of $12, I'll tell you right now, you ain't got to do a whole lot of that to make money. Then I turned around and actually closed out of other strategies for $17, for $21. Okay? It was a freaking free-for-all. Nobody's ever seen trade like this. I can go into so many different products. Here's the XHB. I can go into so many different products and show you the exact same trades again and again and again and again. Here's 53 cents closed for 362. Okay? You want to know where that P&L comes from? Comes from strategies like that. That's how I actually grew the account. Intraday trade, right? I'll go out there and make a couple $100 here, maybe make $1,000 like I did today. Okay, I will take hits. You'll lose, a few $100 here, lose a few $100 here. But you can hit some big hits inside of volatility. If you don't have a huge amount of time, don't worry about it. Okay, listen, if you want to sit there and you want to trade all day, every day with us, I'm fine with that. Okay, we're totally fine with that. But what I'm displaying tonight is intraday trade that I'm trying to make it hands-off for you. I'm trying to make it hands-off because I don't think necessarily everybody wants that level of commitment. If you don't, okay, what I showed today is perfect. And I just did, again, the setup that I showed you today was done live. Each and every trade today was displayed live at TheoTrade, right? Like people are actually seeing me trade. The trade results we're showing, they're perfect for part-timers. Intraday trade can be hands-off. You could use set and forget order types. Literally, you can set the order and say, all right, get me out at this price. Even a fraction of your time is good enough to see results. But if you're on a mobile trading application, that's fine, right? So some of the characteristics of intraday option trades. And the attributes of this, like quantitative analysis and intraday options, they're just undeniable. You got minimal capital exposure. You trade a few dollars at risk. You saw a trade there where I lost 62 cents. You saw another trade where I took a little bit of a hit. I mean, again, when the losses come, and they do come, they're going to be nominal, right? Offer weekly expirations. Some products even offering 3 expirations a week. When you've got 3 expirations per week, like what's not to love? You got to understand expiration allows you to put less capital at risk. Offer incredibly viable risk reward when used properly. Risk is limited to precisely your comfort level. You can come in here and say, I don't want to risk more than $50 in any one trade. You could do it. Right? I can show you exactly how to do that. No need for stop orders. We don't need no stinking stops. I don't like that stuff. I don't like it because I don't see a reason for it. You know what the stop is going to do? It's going to work. That's the problem with stops. They absolutely work. All the stuff that I showed you tonight, every trade I showed you tonight is in a retirement account. I literally showed you my retirement account. And why I did that is, reasonably speaking, first of all, I like trading the retirement account. I'm at the point in my life where I don't want to pay a lot in taxes, which is fine, and I think everybody should get to that point in their life. But I trade at the retirement account because I trade. I trade there. I don't necessarily need the capital immediately. Grow in a retirement account. Avoids the mass risk, sheer magnitude, and the fear produced by futures contracts. Futures is scary. Okay. By the way, the trades are absolutely calls and puts. The trades are calls and puts. Right? And as I said earlier, there is no more pattern day trader rule. You can work right around it. And people have no idea about this, but there's products now. If you're ever worried about the pattern day trader rule, okay, just work around it. Trades don't have to be continually monitored. Okay, a trader can produce returns far beyond the max risk. It's an excellent tool for those seeking returns to build a smaller account. Right? You want to build up your account. You have $2,000. And again, people always ask, how do I get around the day trader margin rule? You really want to see? All right, who here wants to see how to get around the day trader margin rule? Raise your hand. There's going to be a little bit of learning. Who here wants to learn how to get around the day trader margin rule? All right. So they just came out with a brand new product. It makes it easier than ever. So if you want to get around the day trading margin rule, this is the spiders. The spiders qualifies you for day trading margin rule. So if you trade the spiders, you're going to get knocked out. You're going to trade, okay, day trading margin rule. This is a futures contract. Now, if you trade futures contracts do not fall under the regulatory body, okay, the same as stocks and options. Stocks and options are regulated by the Securities Exchange Commission and FINRA. Futures are the NFA, National Futures Association, and the CFTC. Futures contracts, you know what the problem with them? They're huge. They're huge. Yeah, until you actually have micro futures contracts. And many of you don't know this, but micro futures contracts, they're little. Who needs a micro futures contracts? Did you know they also have micro options? Yeah, they started these a week ago. So here is a micro option. You know what the micro option? I'm just showing you what a micro option. Okay, you can come in here and you can actually trade a micro option. And if you take a quick glance at this, you're not seeing double over here. Okay, that trade has $63 at risk plus transaction costs. $63 at risk. Oh, by the way, there is no day trading margin restriction because they're technically futures contracts, but they trade the same as options. Okay, give me a few hours. You give me a few hours. Okay, I can show you exactly how to do that. Listen, you can't let this stuff intimidate you. Building intraday, okay, options trades, and you just, when I say do not let options intimidate you, all right? Listen, the trade below is being done for a 74-cent debit. This, okay, that trade right there would have what? $74 at risk. If you wanted to trade right there, it would have $74 at risk. Okay? Options, though, that could just be a huge power saw. You got to understand something about options. You know, everybody wants to jump into the options business, but nobody ever wants to take the time to learn anything. I'm going to tell you right now, options, this isn't instant coffee and instant tea. You are going to have to sit down with us for a few hours. You're going to have to learn some stuff because you're going to learn real quick, especially from us. Like, listen, not just myself. TheoTrade is not, Don Kaufman. Okay, TheoTrade has 7 other full-time instructors here, many of which would actually came from Thinkorswim, TD Ameritrade, some of the more experienced individuals in this business. You're going to learn real quick. Okay, this is a skill set. Any career that you want to get into, you're going to have to learn something. You want to go to be a doctor? What are you going to do? 4 years of undergrad, 4 years of medical school, 2 years of residency, yada, 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 you're a doctor. I have a lot of friends that are doctors. I do. I have a lot of friends that are doctors, and I'll tell you why. Okay? I actually did my undergraduate in genetics. I have a degree in molecular genetics. You want fries with that? I went into trading. Okay? Why? This is the skill set for me. But I want you guys to know that you're going to go through this. You're going to learn some stuff. It's not going to be instant coffee, instant tea. We've got to sit you down for a couple hours. We've got to show you how to use this stuff correctly. Because I'm going to tell you right now, if you want to create consistent returns, okay, you're going to understand that options are the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. But if you don't know how to use options, you're going to cut off a couple of fingers. And right now, okay, the whole world wants to trade options. I mean, look no further. You hear articles, okay? Articles about like Robinhood and these crazed people. Robinhood, come on. You don't want to trade options over there, okay? How do you think they're making money off of you? All right? Listen, you can trade intraday using options. Maybe you don't know options or you have limited options experience. Do not let this stuff intimidate you. You need these strategies for the foreseeable market future. Because I'm going to tell you right now, if you think volatility has been hot, the last 7-8 months, you ain't seen nothing yet, okay? All we ask for in this business is volatility, okay? We're going to have an election coming up. That's going to be a volatility party. That ain't even the half of it, okay? Talk to me about January, February when we start going into, it's going to be chaos, people. Chaos is what we live for. And, hey, no matter, you got to understand, this country is about to get chaotic. The world is chaotic right now. I mean, we're living through it. You better figure out a way to profit from it because nobody else gives a crap right now except you about in terms of P&L. So I say, listen, if we're going to have to live through the volatility, embrace it. Chaos is a very good thing when it comes to the P&L behind it. And one way or the other, we're about to go through this together. You might as well learn the skill set. Listen, we can show you how and when to place these trades. It does take a couple of hours. And what we do here at TheoTrade is we create detailed recipes for every strategy, including intraday options with quantitative analysis. And the thing that I always talk about whenever I talk about trading options, listen, you wouldn't bake a cake without a recipe, but why do people trade without one? Okay, you're gonna have to have something definitive. You can't just run into this business without having some type of a checklist. And this is what you need to know to successfully enter and exit intraday options strategies. The first thing, what makes a viable intraday options candidate? And when I say that, I mean, I'm not talking about like, listen, people go, oh, I know what a good candidate is. Let's trade Tesla. Okay. Actually, Tesla is a horrible intraday candidate. I know a lot of people might want to jump on them, but it really isn't a good intraday candidate. I like Tesla too. I like the stock. I like trading it. Okay. But it's not a good intraday candidate. By the way, I really like the car too. I highly suggest one if you have the means. You saw me trade stuff like the spiders. You saw a ton of trades in the QQQ. You probably saw some stuff in the IWM. You definitely saw something in Microsoft, right? You saw something inside of Facebook. All of these could be candidates. But candidacy, that's nothing, okay? Because what you really have to know, what volatility should you seek out? A moment ago, I actually said about Tesla, okay? Tesla, it's just not right for me. Why? Its volatility is just too high. You're crazy, okay? That's chaos in there. You're not going to be able to do it. Volatility is too high. You're going to get ripped apart. Next, what options expiration do I select? Okay. How many people have ever looked at an options expiration? When I think about options expiration, let me just intimidate you for 1 second. Here we go. Here we go. Ready? This is the spiders. This is the spiders. Look at this. There's the spiders. You can do this one or 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 this one. It's ridiculous. This only goes out 51 days. Do you think they have enough options listed in here? Okay. There's a whole lot of options on those options. Right? What should be the delta of the option that I buy? What's delta? Right? You got to know. This, by the way, this right here, that's the keys. That's the keys. And I'm going to tell you right now, depending upon the expiration cycle, okay, if you trade this thing with like 1 day to expiration, okay, the delta is going to be one aspect. If you trade it with 2 days to expiration, it's going to be another delta. 3 days to expiration, it's going to be another delta. How about we actually give you a checklist, a sliding scale of exactly what option to trade given the number of days to expiration. Okay? It's important. I love what somebody just said. So don't play around with earnings because too much volatility. With this strategy, absolutely not. We have a completely separate earnings related strategy for intraday traders. Okay? What market factors do I look at before entering into an intraday options position? When I say what market factors, I'm going to tell you right now, there are certain factors that are going to go on in this marketplace that if it ain't right, it's going to say, just don't proceed. Just walk away from the screen that day. It doesn't happen often, okay? But there's times where you're going to look at things as dog and cats living together. You know, you can see that something's just off in the marketplace. Walk. That's going to happen from time to time. You got to know when, okay, to just, close up shop and walk away for that particular day. Can I do this in an IRA or retirement account? Absolutely, unequivocally, yes. You can do this in a retirement account. Of course you can do it in a retirement account. I was doing it in my retirement account. How do I build the trade? Seems easy enough, right? Just click on it. Click on it, Don. Build the trade. When I say how to build the trade now, how to actually build the trade. The in, the out. What percent do I actually make? Okay, when do I get in the trade? When do I get out of the trade? What's the right amount of risk for me? Risk is everything. You have a $2,000 account or a $2 million account. Let me show you what we do here at TheoTrade. We create recipes in trading, right? When I say, again, we create recipes in trading, the way that I always think of this, okay, it's a checklist. You're going to get into a cockpit of an aircraft, right? If you're going to get, nobody goes in an airplane anymore, but you understand what I'm saying. If you hop in to an aircraft, all right, and you're going to fly it, pilots go through this wildly detailed checklist. And they literally, if you've ever been on a plane that's delayed, the pilots show up late because they got stalled out on another plane. They show up late, that doesn't matter. Those pilots are going to spend 25 minutes minimum going through their checklist. They don't just, just don't worry about that one over there. Skip number 3, screw it, we don't need engines. They literally sit there and they go check, and check, and check, and check. Okay? The only way that this works, the only way that this works, is if we give you a recipe for trading. You just can't go through a class and somebody just, oh, go ahead, just knock yourself out over there, and give a little pat on the tushy. Not only give a recipe, you got to actually follow what somebody else is doing. Okay? You want to learn this stuff? Okay? You got to learn to create consistent intraday strategies and setups the right way. So let's discuss criteria, because what you're going to learn is trading, it's not just about getting in. Trading is all about answering the what ifs. Okay, what might be a good stock or ETF candidate for an intraday trade? What's the correct options expiration to lower the risk? How much capital do I commit to intraday positions? What strike price options do I buy? What about the day trading margin restriction, which we talked about, and growing a small account? What should my allocation be? We have those answers. So we build these recipes, definitive criteria, these checklists for each strategy and each unique variable that you're going to encounter. What we do here is answer your questions. We'll give you the right probability, how many option contracts, when to close it. Okay, what if the stock sells off big? What's the correct return for the strategy? What if we rally massively? Can you fix a losing trade? It's about how, it's about when, it's about why, it's about what price, and it's just, I'm telling you right now, I am scraping the surface. It's the beginning of all the variables you're going to face while trading options on an intraday basis. And of course, everybody says this to me too. I'm going to go out there and I'm going to Google this. Listen, you can read what an option is. Everybody can. Tons of free education out there. 10,000 different Google pages are going to come up when you Google options education. You already probably have some experience. Maybe you know how to build an intraday options trade. That's not what we do here at TheoTrade. What we do, okay, is we give you a recipe for success. We give you criteria. And that criteria, okay, that comes from 20 years plus trading experience. That's just me. We have 7 other instructors, okay? One of them, which I was listening to yesterday, he's like, oh, yeah, so, I have 46 years in the business, okay? I'll mention them in a minute. So I have 20 plus years of experience. And this, okay, this is my baby. This is my baby, this intraday, okay? Access to client order flow for 15 years. A huge amount of what you're going to learn in terms of this recipe, it doesn't just stem from me. It actually stems from a lot of the research. A huge amount of research was actually done and poured over to really derive not only just the right options, but the right options and a hands-off strategy for retail clients, something tangible that you could actually follow. We viewed and studied millions of trading accounts. And I say we. There's a bunch of people that work here at TheoTrade that worked, okay, for Thinkorswim, that worked for TD Ameritrade. I ran the education group at TD Ameritrade, okay, and Thinkorswim for 15 years, and we had the largest options order flow in the industry, bar none, okay? And what you're going to learn, criteria is your recipe for success. The following strategy, intraday trading, and the corresponding criteria requires the utmost attention to detail. We literally spent years fine-tuning this trade setup and this criteria. And when you approach the section on criteria, you follow the steps to be able to build a trade. We have a course that we put together. It's consistent intraday strategies and setups. I am the course instructor for this one. It is a 4-hour class. Now, this particular 4-hour class, it's already ready to go. This class is what we call in the can because we edited it, we cleaned it up, we cleaned up the class slide deck, and the class slide deck that includes entry and exit criteria. It's the checklist, is available immediately tonight for download. You can watch the entire class tonight. The course is archived. It has 24/7 access. We even allow you to have download capability on TheoTrade mobile for both iOS and Android. What I'm telling you is TheoTrade, we have our own applications for your mobile devices, any tablets, your Apple phone, your Google phone, Android, whatever it might be, your Samsung phone, it's fine. We actually have apps where you can actually watch the class, okay? Or you can watch it on your computer, whatever does it for you. Listen, before I go any further, okay, the class is $497. However, okay, we're going to add a couple of bonuses tonight. And I'm going to tell you right now, we're going to give a dramatic, not only bonus, but a dramatic discount this evening for the class. And the other aspect that I want to tell you, because this is where people are like, oh yeah, another class. I'm going to tell you right now, okay? Many people that join us, okay, this evening, We get it. You have gone to umpteen different classes, okay? Or you've gone to umpteen different webinars and everybody's selling a class, it's another class, another class. I'm gonna tell you right now, okay, what we do here at TheoTrade, this is not about a $497 class. By the way, I'm also going to give you that indicator that we discussed tonight, which is Quantix. This is not about another class. At TheoTrade, we do not sell individual classes. Because listen, I've been around the education, I've been, around the markets for 22 years. But starting in 2001, I started going out and teaching a couple of classes. So I have almost 20 years of experience of watching all these different education firms. And all these education firms, you know what they do? Okay, I'm going to tell you exactly what they do. They charge you $497 for a class, right? Then they charge you $497 for an indicator because you need the indicator for the class. Now, I'm going to give you the indicator tonight, so you don't have to worry about that. But then they charge you $497 to learn how to use the indicator for the class. And then before you know it, next month they have another $497 class, and it's just nonstop. How many people have ever been through that gauntlet before? Because this is important, because I'm going to tell you right now, number one, here at TheoTrade, we don't sell individual classes, okay? Number two, okay, here at TheoTrade, what you get, right, there's nothing in the industry like what we're about to offer. And I just tell you that right up front. Why? Because I don't want you to think this is the sale of another class. This class means a huge amount to me, okay? But what we're about to provide to you, it's everything that you're going to need to trade. I mean, literally everything that you're going to need to trade, to invest, okay? Every indicator you're going to need, and it's all at one place and at one price. Again, 20 years of watching these education firms, these people that just go out and sell class, sell class, sell class. We do not sell a class, give you a pat on the butt and say, get out of here and go trade. How about you trade with us? How about we actually provide you the trade alerts? Okay? How about it's all encompassing here at TheoTrade? Let me explain. Hang with me for a couple of moments because number one, we have a spectacular offer for you. And number two, okay, we're not just going to give you a class. We're going to do far beyond that. All right. First, here, okay, is the curriculum that we're going to provide to you for the consistent intraday strategies and setups, right? The curriculum. How to create intraday trades, the probabilities on your side. So you can always minimize your risk and maximize return. How to analyze markets so you can read and anticipate market bias, right? This is actually quant logic in here. The option setups with detailed step-by-step entry and exit criteria that are perfect for intraday traders. How the market provides predictable or manipulated ranges for every stock, index, ETF so you can generate daily returns. Okay, little known market insights into what drives markets, okay, to move in one direction so you can get on the right side of trade. The tools and strategies for analyzing any market condition so you can trade with confidence, okay? How to minimize your risk and maximize returns. That's, again, this is just a smattering of what we're covering. All right, how you can generate returns intraday for the small account or retirement account with minimal options experience. We're going to give you the stocks and the indices that make some of the best candidates for intraday trade. What strikes, what expiration period to select, okay? Give you the highest probability of intraday success, when to open, when's the best time to close the trades, what market correlations to watch on an intraday basis, and long-term investments are included in there too. What intraday trading, okay, and why intraday trading means you don't have to necessarily be glued to your screen, and what the best times of the day are for setups for intraday trade. Perfect for traders who can't watch markets all day. That's, again, it's just a smattering of what we're actually covering in this one class, right? Here, what our members are saying. This is actually from Ken. He said, woohoo, thank you, Don. Okay, I'm never sure of trades that are new to me that I structure myself. This is great to hear. This is actually a conversation that happened on email, okay, quite recently. It was actually August 3rd. Just back and forth with a client here. We were talking about a new strategy that we're working on. It says not to brag, but this is due to you and your magnificent team. I am up 1.67 million in profit. Yes, I'm going to pull a big hunk of this out, okay, and my wife's accounts. Plus, I'm going to give my granddaughter $50,000 to work on her master's degree, thanks to all of you. I'll let you know how this trade goes. I need to check the chart of the Japanese ETF. Thank you again, the Blank family. I blanked out their name. This gentleman trades quite a bit. He has a bigger account. Nevertheless, $1.67 million, he's got me. Now with that, as I said, you want a bonus. Listen, here at TheoTrade, we go beyond one class or one indicator. We actually get this business. You want everything to trade. You want everything to invest. You want it at one place and one price. And this is what we do. This is the first bonus. Okay. So we're going to provide to you the consistent intraday strategies and setups course, right? That's ready to go. But in addition to it, we're going to give you our entire library of classes immediately. There are currently 96 classes in here. So what I am telling you is tonight, from day one, we give you everything that we've ever done here at TheoTrade. Why do we do that? It's the only way to do this. Listen, it's the only way to do it. Like, we can't just give you one class. Let's go out and sell a class for $500 and sell another class for $500. We have 96 classes here. Okay? We would rather just give you access to everything from day one. And we literally built like a Netflix for traders. So you have consistent intraday strategies and setups. But then you also have a guide to small account growth with in-out spreads. That right there, that's the most prolific class we've ever done. Guide to surviving and thriving in extreme volatility. Everybody needs to watch that. Volatility back spreads. Guide to small account growth with in-out spreads. Okay, growing a small account with black book spreads. How to collect income being short. The next big short, which is actually the risk twist spread. Another huge one. Guide to selling high probability spreads. Iron condors. Iron condors for income. Selling premium and minimizing your risk. Covered calls. This is kind of mom and pop want to go out there and sell a covered call. We got that. Essential skills for consistency in trading. We even have intraday classes in here all throughout. Okay, pairs trading. You name a genre of trade, we've got it. We're giving you access to over $9,000 in classes alone. Quite frankly, that's only putting a price tag of what? $90 in each class. We give you access to the full library of classes that we have done here at TheoTrade for one day. Okay, I mean literally today we give that to you. Here's some of the TheoTrade instructors. Okay, Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Slim, that's Steve Miller, Tony Rego. Okay, Blake Young. Blake is our newest instructor here. We have 8 full-time instructors. Everybody, okay, has their own specialty, their own genre of trade. Okay, Jeff Bierman. If you've ever been on the Thinkorswim charts, Jeff actually built, literally, okay, this gentleman actually built over half the studies in the Thinkorswim charts. By the way, Jeff Bierman is also a professor of finance at Loyola in Chicago. So you can see Jeff at Loyola, $42,000 a year, or you can actually catch him here at TheoTrade. Jeff Bierman, so as professor of finance, he also carries the designation of CMT. And he was the chief market technician for TD Ameritrade for approximately a period of 6 years before resigning and joining us here at TheoTrade. Matt Williamson, he's our premium selling option strategy. Somebody hopped in here and actually said, hey, I want to learn to sell options. Matt's your guy. Right there. I mean, if you want to sell options, that's fine. You can do it, to your heart's content. But Matt is going to be who you're going to focus on a little bit. We come into Corey Rosenblum. He's our another CMT. By the way, we have 3 CMTs on our crew, this is a really difficult designation to get. We have 3 of them on staff here. He's our senior strategist and resident swing trader. The one thing I want to reiterate about the crew that we have here, there is no education firm anywhere in this industry, okay, that has the level of expertise of these individuals, bar none. Everyone on this crew has to have a minimum, okay, of 15 years of trade experience. Not 15 years in the market, 15 years of active trade experience is the minimum. You always hear is like, well, I'm a stay-at-home, dad or stay-at-home mom, and I learned to trade. You got to get rid of this crap. I'm telling you right now. This guy's a professor of finance. He also ran a hedge fund for multiple years before actually joining us at TD Ameritrade. Matt also ran a hedge fund for a lot of years before actually joining us here at TheoTrade. Managing money ain't all it's cracked up to be. Corey Rosenblum, been around the industry forever. This was a great grab for us when actually Corey came on. Brandon Chapman. Brandon actually also worked with us both at Thinkorswim and TD Ameritrade. And I'll tell you just a brief story about Brandon Chapman. Because this guy right here, he actually writes questions for the CMT exam. But Brandon's real claim to fame at TD Ameritrade. We had an education course at TD Ameritrade. The education course, some of you guys will remember this, was 18 months long. and it cost $24,000. Okay, there was a course that used to be sold at TD Ameritrade, 18-month-long course to become a trader. They charged $24,000. Guess what? Brandon actually wrote the course manual for that. And he'll be the first to tell you, Brandon's one of our big instructors here, he'll be the first to tell you, Brandon, okay, will tell you that what we do here at TheoTrade absolutely smokes it. Okay, and believe me, this doesn't cost any $24,000, right? Next on the list, Slim Miller. Slim Miller now, by the way, okay, he's 46 years in. We were just talking about it literally today. 46 years in. Stock options and futures trader. Slim is also our mindset. If you need trading psychology, that's your guy. We've got classes now on trading psychology and cyclical analysis. Then we come to Tony Rago, our NASDAQ futures and intraday strategies. He just calls setups all day long. Listen, I'm going to tell you right now, okay, from day one, you will enroll here for TheoTrade. You have access to all these instructors. And when I say access, I'm going to show you in just a moment. You can talk to them one-to-one in email. We don't charge any more for that. Talk to these guys, okay? Blake Young, okay? CTA, market profile, futures, currency, and commodity trader. Blake also actually worked with us both at Thinkorswim and TD Ameritrade. So we've got quite the crew that we've actually aligned for you. By the way, Blake also managed money for a lot of years inside of a hedge fund. So that's the first bonus. The first bonus is, of course, we give you access to every trading class that we've done, okay, with these individuals right off the bat. Second bonus over here, all access TheoTrade VIP membership pass for free. And what this basically breaks down to, okay, we're going to give you 3 months unlimited access, okay, to everything we do here at TheoTrade. That includes a live trading chat room. We broadcast 6 hours per day. That's minimum. Lately, we've been broadcasting anywhere from 6.5, even 7 hours a day. Granted, there's only 6.5 trading hours in a day. We start before the market, and like tonight we actually had a happy hour, which was live. Our traders provide real trade ideas, real-time market insights and analysis. We also do text and push notification of trade ideas. Somebody was asking in the chat, like, how often do you guys send out text and push notifications? So we trade in the chat room all day long. Okay, we text out on average of 3 trades in a given week. 3 trades in a given week, but it doesn't work out like I must trade 3 times a week. Usually works out like I'll do 1 trade this week. Next thing, I'm doing 6, 7 trades next week. Then the week after that, I do 3 trades. Okay, I am not going to just send out 3 crap trades to you. If I'm not doing the trades with my own capital, I'm simply not going to send anything out. And it just works out. We average approximately, okay, 3 trades per week in terms of text and push notification. We have 5 distinct trading portfolios. We also have daily coaching sessions. Our coaching sessions are actually done by Professor Jeff Bierman. This is timely topics on stocks, options, and futures. So the daily coaching sessions, it's continuing education. We don't just sit there and trade in front of you, trade. We actually have, okay, again, a full-blown hour segment every single day that is a timely session, continuing education. Probably the biggest thing in here, and bonus number 2, all of our instructors answer email. I'm going to tell you right now, that, okay, is worth its weight in gold. Imagine this, you email us one time in the next 3 months. We could save you thousands. It's access to over $1,000 support, trades, and insight. It's just part of what we do. In addition to this, we also provide you 59 proprietary indicators and scans. We give you auto expected move, gravity points, TheoTrade RSI Laguerre. What I'm actually detailing here, these are proprietary studies that we use. Okay, all of them we're giving you access to tonight. Okay, we're just giving you access. Why do we do that? It's the only thing we can do. Okay, when I say it's the only thing we can do, okay, it's the only thing we can do simply because, listen, we use these indicators. Like, people don't get it. Watch. Okay, I use Quantix, but you know what? I use even more than Quantix. I use like auto expected moves. I use this all the time. You don't have to be on this trading application. It's okay. Okay, you can see me do it, but that's fine. We give you all of that from day one. This is the kind of stuff that other firms that charge you thousands of dollars. Quantix, I'm going to give it to you in just a minute. Literally, hang out with me for a couple of moments. And I know I've gone a little bit late over here tonight. It's fine. Okay, it's fine. If you're into this stuff, great. Okay, those that won't even take the time to sit here through this, okay, I'm telling you, you got to be able to take some time to learn this business. All right, and what we do here, again, we give you what, 96 trading classes for tonight. Okay, We give you 3 months access to TheoStream, but including access to email. Everything that we've done in here. We'll text you, push notification of trades. We give you 59 proprietary indicators and scans. Okay? And the third bonus, how about this? We have a live class coming up. So a live class. This class is called Option Oddities, Tracking Unusual Options Activity. This is huge. This is what's so hot right now. Okay? People are constantly talking about, oh, there was a huge options trade done, in Tesla. There's a huge options trade done over here in Nikola. There's a huge option trade done in NIO. All right? We are actually going to break those down. We're going to break them down. The instructor is going to be Brandon Chapman. Like, this is his mantra. The class is live. It's Tuesday, October 6th, 9 a.m. to 11 a.m. Central Time. We're going to open the market. Then we're actually going to do a class live during the trading session, because this is a very dynamic class that should be done during the trading session. The course, I know not everybody can make it live. Okay, mark it on your calendars here, because the course is when I say it's coming up, yeah, it's coming up like right here, right now. This class is, whether you're there or not, it's happening October 6th. Okay, it's happening October 6th, but the course will be archived immediately. All right, and we'll give you all the detailed PowerPoints with it. So that course is coming up. And again, that's the third bonus. We never stop producing new courses. We're going to give you access to TheoTrade for the next 3 months. In those 3 months, you're going to get another 3 classes in here. This one, though, this is one that you really want to focus on, because this goes hand in hand. Okay, it just goes hand in hand with what we're doing tonight, specifically about intraday trade. What you're going to learn: tracking unusual options activity. What is unusual option activity? Okay, discover why this activity is an important indicator of institutional money flow and sector rotation. What resources can be used to identify significant activity? Learn how to find significant option activity and other important indicators. Okay, other important considerations. Learn how to use time and sales, volume, and open interest to identify significant trading activity, and learn how to construct stock and option trades around that activity. I mean, what we do here at TheoTrade, we give you everything. Everything you're going to need to invest, everything you're going to need to trade, right? So we have classes, we have coaching, we have email access, we have a live trading chat room, indicators and scans, mobile access 24/7. It's everything you're going to need. I mean, what we tried to build here from the get-go is TheoTrade is the Netflix for traders. You name a genre of trade, we've got it. Tonight, it's $297 for 3 months. Okay, and I want to clarify something right off the bat, because it couldn't be easier. You can go right now to TheoTrade.com/day. Okay, TheoTrade.com/day. Enroll for it. It's $297 for 3 months. This, okay, is a one-time, okay, charge. This is not a membership. This is not an introductory price. Everybody always asks this, so I'm getting to it right now. For $297, you go for 3 months. You say, what happens after 3 months? We ask you, would you like to do this again? You want to do it again? Guess what? It's $297. Okay, what does that give you? Another 3 months. We don't change anything on you. Okay, just detailing everything you get. Consistent intraday strategies and setups. That class is ready to go right now. We'll give you access to another 96 trading classes. There's new monthly classes. Obviously, this one is coming up Tuesday, October 6th, and that's Brandon Chapman. Option Oddities. We have a live trading chat room. We broadcast a minimum of 6 hours a day. There's real market insights, real-time trades. We give you 59 proprietary indicators and scans, text, push notification, trade ideas, 5 separate portfolios, daily coaching sessions, okay? And I put huge stock into this right here. We actually answer your emails, okay? I'm going to tell you right now, for $297 for 3 months, to email us a couple times. When I say emails, we will respond to your email one-to-one within 24 hours, okay? We have 6,000 clients, and we're constantly adding more instructors here. Why? Because we give that one-to-one support. And that's a big portion of our business, is supporting you. But if you have a question about a trade, and I want to make this clear, and I want to put a lot of stock into this. You have a question about a trade, email us. We're not going to shy away from like, hey, my brother was thinking about doing this trade. Just email us and ask us the damn question. Like, seriously, just ask us the question. We will answer trade-related questions. It doesn't have to be like hypothetical and paper trading. Go to TheoTrade.com/day. Okay, one other aspect. TheoTrade, it's completely riskless trade. We're going to provide you everything that you need to start trading, just from novice to absolute expert. We'll put a money back guarantee on it. And we do this to set a lot of people at ease. Okay? We do a money back guarantee. Trade with us. And trade with us over the next 3 months. If you're not completely satisfied, by the way, we don't put quotes on what satisfied means, but if you're not completely satisfied, just email support@theotrade.com. You do have to provide us the detail of your trades, receive a full refund. Listen, okay? It's $297. The bottom line here, we want you guys to be happy. We want you to be satisfied. Okay? We want you to come back and spend another 3 months with us. That's how we built up to 6,000 members. Okay? The only money back guarantee stipulations are simply this, right? You got to do 10 trades, okay, using any of our strategies. Because again, we have 96 classes. Use any of our strategies and any of our criteria in the next 3 months. Do you think you could do 10 trades in the next 3 months? Why do we do this? Because we don't want people coming through, okay, watching every course after the 3 months and then turning around and go, I never traded, but I'm also not satisfied. Okay? You got to make this a fair shake. It's a fair shake for us, a fair shake for you. You have to do 10 trades inside of the next 3 months. You realize that we do text messaging here. We're going to do over 10 trades, obviously, in the next couple of weeks. So just follow our trades. If you're not satisfied, get your money back. Okay? Oh, you must follow our criteria. Okay, you don't necessarily have to do intraday, but you have to follow our criteria. You can't make stuff up and go, I was doing this, it was a good idea, right? Also, the last thing, you have to trade real account statements. If you're not willing to put your money where your mouth is, okay, and step up, right, that's important to us. It has to be real trade, all right? So your initial account value has to be $2,000. You actually have to do a couple of real live trades, at least 10 trades in the next 3 months. If you're not happy, we will give you your $297 back. And I always stress this to people. Listen, it's $297. Okay? I don't want anybody that's here that's not going to be happy. So if you're not happy, please take the $297 back. And I hope that we part on great terms, because what we do for $297 for 3 months, there's nowhere that you can spend that money anywhere in this business. And I really stress this. Nowhere in this business at any dollar amount can you get this kind of education. And if there is a place, you tell me, okay? You tell me, because I want to hear it. I want to know, okay, if there's something that we're lacking here at TheoTrade, I want to know about it, because that's what we are. It's a one-stop place for all things trade. Get into TheoTrade now. We're going to work with you directly. We will do 30 riskless spots this evening. There are 30 open spots for the riskless trade deal. Now, we only do 30 spots for tonight, obviously, to incentivize you to get in for $297. Why do we do 30 spots? Because I actually have to go through and reconcile all of these trades. Okay? We trade live, right? But I got to reconcile 30 people's trades times 10 to 20 trades. It's huge. And we provide unlimited email mentoring. So you can actually shoot us emails back and forth. Send us your trades. Send us your trades. Listen, the $297 riskless offer has never been available before with, okay, consistent intraday strategies and setups, and, okay, the additional class, option oddities, tracking unusual options activity. Again, that class is coming up October 6th. October 6th during the trading session over here. All right, so I'll recap a couple things. By the way, what our members are saying. This comes from Jeff, July 16th. Thanks for the reply. Your email clarifies the confusion that I had. I would like to add, okay, that I've only been a part of TheoTrade for a couple of weeks or so now, okay, but wanted to say thanks for creating such, okay, or something that absolutely destroys all other monthly investor education services out there. You guys nailed the simple yet brilliant formula of providing education for all styles of trading from novice to pro in small, digestible bites on a daily basis through live trading. Thanks for all you do. This is actually Jeff from Toronto, Canada. All right, this is everything they're actually providing. If you go to theotrade.com/day, I'll take you there here momentarily. Obviously, it's $297 today. The bonuses, you get 3 months access to TheoTrade. This is not an introductory price. It's a one-time charge. The second thing, okay, you get access to 96 classes, day trading and swing trading and technical trading. Bonus number 3, the live class coming up October 6th. I'm actually going to take you right now over to TheoTrade. I'm going to show you a little bit about TheoTrade. Then I'm actually going to answer some questions here and get everybody's questions answered. Okay, this is TheoTrade. One of the first things I want to show you though before I even go to TheoTrade, if you could follow me right here, right now. This is theotrade.com/day. That's D as in David, A as in Apple, Y as in yes. So theotrade.com/day. We currently have, as I said, there are 30 riskless spots. Okay, we're here to be able to answer some questions for you guys. If you need us, we're absolutely there. Okay, looking down over here, it includes 3 months access. Okay, every on-demand recording. But the bonus tonight, option oddities, tracking unusual options activity class, Brandon Chapman. Again, it's October 6th, 10 a.m. to 12 p.m. Okay, obviously Eastern time, 7 a.m. to 9 a.m. Pacific time. If you click add to cart, and the reason I'm showing you this, okay, a couple quick points I want to make, and then I'm going to show you a little bit about TheoTrade. By the way, somebody said, is the Infinity class included? Everything is. Absolutely. The Infinity class is absolutely in there. So the Infinity classes, I like that one. That's like one of the most fun classes I ever put together. The billing information, but I wanted to show you a couple things over here. If you cruise down to the bottom of this, well, there's a couple things here. Number one, you can pay $297 tonight. This is not why I'm showing it to you. I'm showing you this. It's $297 because it's a single payment. That's it. There's no reoccurring payment. We don't like memberships. And when I say we don't like memberships, I say we don't like when people like you sign up for a gym membership. How do you get out of a gym membership? You have to like give blood to get out of a gym membership, right? We don't do that here. We just don't do it because we don't like it and we don't think you're going to like it. You could actually do tonight, you could pay $297 or you could do 2 payments of $149. That's completely up to you. We do give you that option. The other thing I wanted to show you here as you're enrolling tonight, okay? I know it sounds strange. Put your phone number in here. Why do you want to put your phone number in here? Put your phone number in there because it's going to give you the text messaging. It automatically enrolls you for text messages. So again, go to, once again, I'll pop this up here. It's theotrade.com/day. And then I'm going to come in here and I'm going to answer a ton of questions. This will also detail everything that's included on this particular page. For those of you that waited patiently, there's also, okay, the quant indicator for Thinkorswim. This is where you download it. You go to theotrade.com/day. On the very bottom of the page, you can download it. Those of you, as you're enrolling tonight, okay, as you're enrolling tonight, you need not download that indicator this evening. We will give you every indicator, okay, that you need. Plain and simple. We just will provide you the indicators that you guys need. Just come in. Don't worry about it. Just start watching some of the classes. We'll give you the indicators you need over time. We have an entire page set up specifically for those indicators. So I wanted to show you a little bit about TheoTrade. Again, as you guys are enrolling, again, it's theotrade.com/day. So this is what TheoTrade looks like. This is TheoTrade. There was, okay, a happy hour tonight. It's something we do on Wednesday nights, live September 30th. The happy hour tonight was done by Professor Bierman, right? So you can actually see clients, okay, they're talking. There's been hundreds and hundreds of clients in here right now, right? So you can go back as far as you want. You guys can look through all the messages in here, okay? We post links in here, anything that you guys are going to need. By the way, this is an instructor here, okay? And as you scroll up and down, this is an instructor here, all right? Brian Aponte, he's actually support here. It goes on and on and on. Everybody's in there to help you guys out in the chat room, but then this is where we actually broadcast. Okay, and this is actually broadcasting, and you can fast forward and rewind as you're actually going in here. So you can broadcast, rewind, it's all available. The next, okay, this is the archive for the classes. Okay, so this is the archive for every class that we've ever done. Option classes and option newbie classes and day trading classes and trend trading classes. You name a genre of trade. Remember I was talking about mindset? Okay, if you can't get out of your own head in trading, think about this, $297, okay? Just watch this, 5 essential building blocks to successful trading. This is Slim Miller. It's unbelievable. I mean, that class, we could have charged thousands for. Guy is unbelievable. You'd be just smoked by what he can do, okay? And that class, it's a little bit of a longer class, but that thing is worth it. By the way, here's the option strategy classes. This is kind of my area of expertise. selling options for a living, guide to maximum edge trading earnings, back spreads, volatility crash course. Somebody was asking me about infinity spreads. Okay, here it is. Maximum returns with infinity spreads. There's a straddles class. There's black book spreads. Surviving and thriving in extreme volatility, controlling your risk, gamma irons. Okay, you have access to all of this. Okay, if you are into charts, I don't want to let you think that we don't have charts here. Come in here and under technical analysis. Okay, we have unbelievable market technicians, market profile, tools to spot explosive moves, synchronized trading, power of linear regression, MACD, DMI, trade triggers. Okay, you name it, we have it. Okay, one other really key component here at TheoTrade, the Start Here menu. I put a lot of weight into this because the Start Here. There's going to be people that are going to come out tonight. All right, and they're going to come out tonight. They're going to be like, I don't know anything about options. Why do you think we came up with the Start Here? Okay, you don't have to know anything about the market at all. Just come in here, Options 101, Options 201. Now, for those of you that are experienced, everybody that experienced, like, I don't need that garbage. Really? Check this out. Order execution part 1, 2, and 3. Those 3 classes, okay? I don't care how experienced you are. I spent 15 years of my life working on order routing at Thinkorswim. There's nothing I don't understand about payment for order flow. There's nothing I don't understand about level 2 NASDAQ, about order execution. You're going to watch those 3, you're going to be blown away. Those classes alone, that's going to save you thousands of dollars. What we show you in this 3-part class is how to get better fills, better execution. And I'm telling you, okay, you want to come here and spend $297 to learn how to trade, that's great. But if you're super experienced, tell you, start there. The order execution stuff is just going to blow your mind of what we do. Then you look at this, you're like, man, there's a lot on your website. We actually built like a whole search engine on the site. Like one of the big strategies we do here is called in-out spreads. Okay, so type in like in-out and just hit search. Every single title that has ever encompassed in-out spreads is going to populate in here. If you want to know everything there is to know, look at this. In-out spread, there's a quiz, right? Coaching session. In-out spreads. Okay, in-out spreads. There was actually a great session I did in here, the ins and outs of in-out spreads. Okay, all of it is actually right here in the archive, completely searchable. All right. Again, go to theotrade.com/day. Let me actually come back, answer a couple of questions in here. I'm going to do some generalized questions, and we'll kind of move on. By the way, this is what our members are saying. This comes from Curtis. Curtis, please allow me to impress upon you how incredibly valuable your first hour in the chat room was today. Okay, your true concern for the welfare of your clients, listeners, is unmatched in the industry, and you gave incredibly practical advice for those feeling the pain. Okay, almost as if you were in their personal trading coach. It was amazing. I only wish all of my I don't want to sell, in this case, keeps going higher friends were listening. Okay, this gentleman in here, he's a professional. Okay, this is actually a CFA, CMT, and a former institutional portfolio manager. We have everybody from absolute novices to big time professionals in here. So go to theotrade.com/day, enroll for it now. This one actually comes from Todd Summerall. It says, hi, Don. Don't know if you remember me, but I emailed you a few weeks ago and told you my delta was positive a couple thousand or more. You told me to smash it or I was going to be in trouble, so I smashed it. You saved my account. I just want to thank you. For your information, before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want. Yes, Todd, I am using it. You know what? I wanted to show you this one because this has nothing to do with day trading. This has to do with the fact that this gentleman, and by the way, this email says Friday. This email actually came in all the way back in March, and it was March of this year. And the reason I threw this email in here, this guy actually had, huge risk on, and he emailed me, and I said, you don't get out of this, you're done. I mean, you're done. And the reason I'm bringing this up because you can email us, and I've had every brokerage license imaginable. Right? I've had a Series 3, a Series 4, a Series 7, a Series 66. I've actually had my Series 24. Okay, I've had them all. I know how to answer questions appropriately. I know how to actually, we're not giving advice here, but you got to understand, you have detailed trading questions. I said, don't hedge around it. You tell me what the problem is in an email, we're going to get you an answer. Okay, I mean that's what we're about. And again, I can show you email after email after email. All right. By the way, I've probably lost and left at least 6 figures on the table because I didn't understand what clicked for me today. This is an email that actually came in a little bit more recently. It's from Christopher. We helped him out quite a bit. Let me answer some generalized questions for you guys. By the way, those of you, as you are enrolling tonight, as we said earlier, okay, we currently have 30 riskless spots left. And somebody came in the chat and they said, how do I know if I'm in the riskless spot? Well, I'll read off the name if that works for you guys. It takes me about 5-6 minutes to be able to see your name populate in here. Okay, but I'll read off the names. Okay, and I hope I don't butcher this first name in here. It's Reginald E from Canada. Okay, Anthony B from Pennsylvania, Gary E from New York, Michael W from California, Donald B from New York, George M from California, Enrique A from Texas, Richard D from Texas, Gerald J from Tennessee, Regina G from North Carolina, Kevin M from California. So those are the first individuals that have just now enrolled. You're in the riskless spots. So I think I just read off about 10, 12 names. Okay, there's still more coming in. Again, it takes me anywhere from 5 to 6 minutes before I see your enrollment come through on my side. Let me answer some general questions, and then I'm going to actually answer really specific questions from the chat room. So some of the generalized questions that come in here, I'm just going to rip through these really quick. Listen, people always ask, what do you need? What do you need to get started? You need a laptop, internet connection. We have everything you're going to need from absolute novice to the most extreme. And I really do tell you, when I say absolute novice, like you've never traded anything before, we're geared for that. But then I'm also going to tell you this. If you think you're extreme, step up to the plate. Because some of the stuff that we do in a few of the classes, okay, it'll blow your mind. I mean, for what? And again, people always go like, it just can't be that good. It's only $297, okay? Oh, it is that good. Again, when we built TheoTrade, okay, there's no question. I set out, on like a mission after leaving TD Ameritrade. Okay, I set out on a mission to try to absolutely dominate in the education world because I'm watching all this educational crap for 20 years, and we're like, I could do better than that, and we've got all these instructors here, and nobody wants to work in the brokerage world anymore. Let's just go out. Let's go out and actually build a company that does this and does it right and does it at a price that people can accept. The first time you actually probably hopped on Netflix, you're probably like, how do they do this for $15 a month? Now Netflix is kind of like, they don't add very much on there these days. We're constantly adding, constantly bringing on new people. Okay, we're in the absolute peak right now of bringing on new traders and bringing on new trades. It's phenomenal. Okay, number two, this is not a membership. This is not a membership. This is not like Netflix. It's not like a gym. We're not going to auto renew or bill you again. You know what? Right here, that wasn't exactly a great business decision for us, but it's what's right by you. If you want to do this, we want you here. Okay. If you don't want to, we don't want to hit you for $297 every 3 months. Listen, it's $297. If you want to do it again, do it again. You decide that. 3, we are providing weekly video updates so you can follow all the moves we make. We do a lot of different spreads. We do in-out spreads. We do gamma iron condors. We do risk twist spreads. We do back ratio spreads. And we do all these weekly videos updating you on trades. We also, of course, are texting you out trades. Okay. But the weekly video gets you to understand why we texted out the trade, what we're doing, why we're doing certain moves. All right. Number 4, we archive everything. Every word ever spoken on TheoTrade is archived. I mean, literally since we launched in 2016. So I left TD Ameritrade in 2015. Okay. We have a couple partners in TheoTrade. We got together in 2015 and launched in 2016. But literally every word that we've spoken since 2016 is archived in here, and all of it is searchable. All right. Number 5, we're going to provide you access to TheoTrade Mobile. You can download archives and view at your leisure. On TheoTrade Mobile, you could also play it back at like 2 times the speed or 1.5 times the speed because I already speak fairly quickly. Okay. All right. Moving on over here. Number 6, add your cell phone number, which I talked about when enrolling, and receive text messages. Now this has to be some type of a smartphone. Actually, not everything has to be a smartphone to be text messages, but to download TheoTrade Mobile, that's for iOS and Android. That does have to obviously be a smartphone. Not everybody necessarily has a phone. It's fine, but text messaging, I mean, if you want those notifications pushed out to you, okay, on text, you got to obviously have text messaging enabled. You can email us anytime, and you're going to receive a response within 24 hours. It includes trade-related questions. I've hammered that all the time because I just like the idea you can email us. Support is everything. And we have 6,000 clients, and we handle a couple hundred emails a day. It's okay. There's 8 full-time instructors. By the way, we do not have, okay, any we don't have any associates here at TheoTrade that are not traders. Everybody that works here, okay, there's no office administration. Everybody trades, okay. You're going to gain access to every course we've done in the previous 4 years. Classing, coaching, trading sessions, everything is searchable. Number 9, okay, all the classes could be done inside, or all the trades, I should say, could be done inside of an IRA or retirement account with as little as $2,000 in the account. Okay. Number 10 over here, we at TheoTrade can help you get approved for options. Okay. A lot of people will basically, they'll sign up here and they go, I went to my brokerage firm and my brokerage firm won't let me trade options. We can help with that. We have relationships, okay, with E-Trade, with TD Ameritrade, with Charles Schwab, okay, with Tastyworks. So we have relationships with all the major broker dealers out there, and we can get you approved for options. Remember, there are 30 riskless trade spots available, okay? 30 riskless trade spots available tonight. And again, I'm going to read off a couple of more names in here just about a second. Listen, get results, take action, enroll for TheoTrade now. There's no risk tonight in enrolling. Again, if you're not happy with us after the 90 days with us, just email us. We'll give you $297 back. It's theotrade.com/day. I'll take you back over to the site, and again, I'm going to answer some questions directly from the chat right now. Again, I just wanted to remind, because another person asked me about the phone number. Putting in the phone number over here simply gets you enrolled for our text messages. We just do it automatically. I just figured I'd mention it in there again. Again, it's theotrade.com/day. All right, a couple of questions. There's a few more names that just popped in here too. Julie C. from Georgia, Christian G. from Canada, Tony G. from Virginia, Emmanuel P. from New York. Again, I'm just reading off a couple of names. Everybody I've read off thus far is actually, okay, enrolled for the 30 riskless spots. Somebody says, you guys text message Canadians? It depends. Okay, it depends, but I'll tell you this. If you have push notification on your device, just download our mobile application anywhere in the world, and you will receive push notifications. It's one of the reasons that I can't guarantee every single cell phone provider is going to receive text messages. We have a lot of clients in Singapore. We have a ton of clients down in Australia, and we can't necessarily text them. But what we do is we use push notifications, which is our mobile device will actually alert you on there. I hope that helps to agree. By the way, if you're in Canada, we can also give you some suggestions for a brokerage firm. First one came in, question here from Rob. Does Don follow a percentage size trade per account? So Rob, it depends on the strategy, okay? For day trading, all right, or intraday trading, yes, a percentage of the account, okay? But there are other strategies that are not about percentages. There are other strategies that are more about hedging opportunities. So it varies a little bit from strategy to strategy. So how much capital, though, you're going to risk, okay, is very often a percentage of your account. So if you have you don't treat a $10,000 account the same as you treat a $1 million account. And I just want you guys to know that, like, if I say that, a $10,000 account, you allocate 2%, you don't allocate 2% from $1 million account. So what you're going to learn, Rob, is that how you use capital is not linear, dependent upon the trading account size, right? So it's not linear. So a $1 million account is a much smaller percentage than a $10,000 account, okay? Laurent asked a question. Don, is there an advantage of puts over calls? Absolutely, especially in intraday trade. You will see me using puts considerably more than calls. People think they make a lot of money with calls. Just wait till you learn about puts. The reason puts are viable, volatility is wind at your back. Volatility can actually help substantially when you buy puts because if volatility hits the marketplace, the puts actually increase in value. I already covered this one earlier, but it says, are all your trades one lots? Absolutely not. And I trade, I trade a variety of different sizes. It just depends on the strategy, depends on the allocation. And I'll show you like in certain allocations that I'm in here, like here, I've got some positions inside of Lulu, right? So Lululemon. Here, this is a trade we actually fired out today. You can see there's 1,500 contracts that were done today. But I also fired out a trade over here, okay? And then on top of it, I've got a couple trades way out in time over here. Let me just show you, okay? When it comes to contract size, open them all up, okay? These are expensive contracts, right? So somebody said, do I fire one lots? Check this out. That's a one lot. That's a one lot, but it's a $10,000 trade. This is a $10,000 trade. This is a $10,000 trade. This is a $10,000 trade. Like they're all, again, I stack them out that way. And I've also got positions inside of Apple, very, very similar in retrospect. So again, that's the size of the trade. Not every trade. Again, what you were looking at over there, those in the money puts were a portion. That was the buy side, and I'm actually selling other option premium against those. So that's something you can actually learn. It's one of the classes. It's how to get short and sell premium. All right. So Derek asked a question. Wouldn't theta be really bad on buying calls or puts, okay, on the day of expiration? So Derek, the answer is absolutely. It's all or none. If you trade the options on the expiration day, it's all or none. But here's the bright side of it. Theta is terrible, but gamma is a wonderful thing, Derek. And you're actually going to learn exactly, okay, the right expiration cycle to use. All right. Do not think because the option is going to decay against you, it's a bad thing. Okay. Gamma is explosive. In fact, that's how if you looked at like SoftBank a couple of weeks ago, a big story broke that SoftBank was actually causing a gamma squeeze in the marketplace. Yeah, they were actually doing that through options that were expiring in very short durations. Okay. By the way, somebody says, does Don allow members to follow his trades while learning? Yeah, I mean, all my trades are done live in front of you. And I actually copy and post the trades. Even like the intraday trades, I fire those into the chat room all throughout the course of the day. For such volatile markets, would good till canceled orders be exit a good idea if you don't watch consistently? Yeah, so we will actually discuss some good till canceled orders. But for intraday trade, it's actually, you could use good till canceled on an intraday basis, but you don't necessarily have to. For intraday trade, you can actually open the trade early in the day and just come back with like 10 minutes to go to the close. And you'll actually see that covered in the course and why we cover that in the course. Okay. Another question came in and says, this is said, how difficult is it to sell an option that's expiring that day? I'll tell you this, I wouldn't do that. I wouldn't do that with your money. I wouldn't do that with my money. People can make money selling options, though, on expiration day. It'll only one trade goes against you, and you're going to find out real quick why I don't want to do that, right? By the way, there's a ton more people just came through on the enrollment, so I'm going to read those off, and then I'm going to finish the questions. Evelyn A. from Maryland. Excuse me. Evelyn A. from Maryland. Gary M. from Pennsylvania. Othniel from United Kingdom. So George B. from Arkansas, John B. from Louisiana, Gregory G. from Indiana, David A. from Missouri, Thomas H. from Florida, Brian D. from Massachusetts, Larry L. from Alaska. Obviously, a lot of our 30 spots are filling up here pretty rapidly here. I'm trying to grab all the questions here. Somebody said, where is this course going to show up? The course library. I'm looking in my course library. Okay. And by the way, all you have to do, okay, Julie, just shoot us an email and we can actually walk you through where all the courses. But we're actually going to send you an email that specifically has the link to consistent intraday strategies and setups. Okay. But shoot us an email and I'll try to grab that email even tonight if you want. You know what? We can even post the link in there right now for you. So I know Corey's on tonight and Matt's on tonight. Jeff's on tonight to actually help out. If you want, you guys can post the link to the actual class for Julie right into the chat room. That would actually help a little bit in there. Julie is, yeah, I already see you were actually enrolled here, so you should be good to go. It takes a few minutes sometimes before it actually shows up in there. By the way, if you don't get that link in a few moments, I will link it myself. It's just easier than grabbing an email. I'll link it out there myself to you. Okay, so all right, somebody said, what's the difference between this course and Guide to Small Account Growth with in-out spreads? So that one actually comes from Julie. In-out spreads, it's a vast departure. In-out spreads are actually held overnight. They're actually held for sometimes, 3, 4, even 5 weeks. The intraday class is just that. You're in, you're out, you're on with your life. And it's a very, very different, trade setup. Very different trade setup. By the way, they posted you the link already there, Julie. So fantastic. This is a completely different trade setup. In-out spreads. In-out spreads are like wonderful for volatility, but in-out spreads are really designed for people that want to hold trades for a couple of days, right? And not get killed, in some of the volatility. This is going in and literally I'm in, I'm out, intraday, okay? And you're going to strike out on intraday a little bit, but you're going to find out, you go out there, you buy an option for $1, all of a sudden it turns into $6, $7. You only have to do that a couple times a month to make it worth your while. All right. David actually asked, how many days to expiration on these options? David, it actually depends. It depends on how many days to expiration. That's something the class is going to cover. And that answer is a very dynamic answer. It's not just as straightforward as you think. It depends on the product that you're trading. Apple only offers weekly expirations. Spiders offer 3 expirations per week, so it's going to depend. Okay. All right, let me continue over here. Oh, somebody said, how much is it to get recommended intraday or swing trades or long and short trade alerts to these alerts? Okay, so we do an average of about 3 trades a week. That's just part of the $297. That's it. Okay. Oh, somebody said, do you have an unusual option scanner script that picks up contracts? Yeah, of course. Okay. Actually, here, some fun stuff to know. See this option statistics down here, Thinkorswim? I helped actually build that. I also helped engineer a lot of the scanner. And when you look at my list here, this is what you're looking for: unusual put scan, okay, unusual put volume scan, okay. So these are scans that are designed exclusively to find odd or unusually large trades. So yeah, I'm well versed in that side of trade. So listen, I've kept people way longer. A couple more people that came through. William O from Connecticut, I got you in here. I've gone way longer than I intended to, and I apologize for that. But I wanted to give you a fair shake at seeing everything. I'm trying to answer every single question in here. If there's something I did not get a hold of, I will. Oh, Kenneth came in with a question. Are you allowed to trade the micro option in an IRA? Kenneth, they are opening up options on futures inside of the IRA, even at TD Ameritrade, and that's actually brand new. So listen, I kept you guys way over. Again, it's theotrade.com/Dave. I'm actually going to be on first thing in the morning. I start pretty much every morning, 6:22 Pacific time, 6:22 Pacific time, 9:22 East Coast time. Baron H from Nevada, Keith F from Maryland. There's a couple more people. Again, it takes me 5 to 6 minutes before I see you guys enroll. So Baron, you're good. Keith, you're good. I'll be kicking off the day tomorrow. Please come into the chat room, say hello, fire off questions. If you ever need to get a hold of me, support at theotrade.com, and those emails, I do not only read them, I answer them. Thanks everybody for joining us tonight. Have a wonderful evening. Bye bye.